reason you're seeing the pressure which is building up so far. Sharad, apart from these names, anything that you are pointing out where you're seeing some moves that are coming in?
Well, Hiral, looking at the numbers, Prince Pipes is something which I had mentioned earlier also in my stock. So the numbers are pretty strong. The stock is up almost 8% in the day's trade. And apart from this also, if you look at it, Karnataka Bank, that's also momentum is coming in a weaker market also. The company is outperforming. The stock is up almost 2.5% as well. Apart from this also, if you look at it, largely Sambhav Steel also is doing well in trade on back of new announcements coming in. But just from this list itself, you know, I just have a question for Chandan. Prince Pipes, so that stock, you know, is doing largely well, a cash market stock. Do you think that important technical levels, especially on a positional basis, can show a further up move in this counter? Already Q3 and Q4 was strong.
Yes, that's a very interesting price setup, and we need to keep in mind that in this market there are very selective counter which are doing well in the mid cap, small cap, and forming the positive price pattern. In morning we discussed two names, whether the Vogue Pharma or Mankind, and both the stocks are doing well. And Prince Pipe is also one of that strong setup, which has given a consolidation breakout of almost 25 weeks. It surpassed a major hurdle of 280 and has been making higher tops, higher bottom on lower time frame as well. So I believe this ongoing breakout momentum and the volume surge can take the prices high. Those who are the fan of the technical, they can also observe an inwards head and shoulder pattern on the weekly chart, which has the bullish implication. So one can buy, momentum could continue. 282 will be support, and this time it can head towards 305 to 312.
Okay. Well, 9% higher and counting. Kush Bora, I'm going to come to you with the one which got slammed today. And no prize for guessing that one. The point is it near support levels? PI Industries. If somebody had a position, would you average it or no, not really?
Yeah, not a big fan of averaging. I wouldn't average. In fact, I would look to exit this one. Look at the volumes. Of course, you know, this is news-based, but look at the kind of volumes on the downside, you know, on this one. 2850, 2900, that's the support zone. It's trying to respect that, but it's given, you know, a breakdown after a long period of consolidation. So, you know, if you want to give yourself a hope, then 2800, that's the level. Keep a stop loss, and then, you know, perhaps there could be rebound from those. But right now, I would suggest an exit on PI Industries.
Okay. Well, so even if you were long, Kush Bora is saying exit PI Industries. It's that big talking point of the morning, and that stock has really gotten slammed. We know that the likes of Zydus, etc., are doing okay. I wonder if some of the chemical names, Acutaas had a good start yesterday. Is that continuing to do well today? Zydus is, by the way, up 6.5%. Acutaas not so much. KPIT Tech, the last 2 or 3 days in this tech rally, has actually had a good bounce. I wonder if it's doing well today. Another 1.5%. So that's not doing too badly either. Decent showing here in this one too. But Parag Bhai, what within this broader market ecosystem the last 2 or 3 days in terms of results has stood out for you?
So as I said, Zydus Life and Mankind clearly stood out.
For the last 24 hours.
And this is the sector where everyone wants to buy also.
Pharma.
Just to get insulated from whatever is happening on the crude oil side and the bond yield side. So I would say that, so these are the two very interesting results which have come. I would say that, and the stocks are also reasonable in terms of valuations.
Okay, so that's Mankind, Zydus, 6.5%.
Of course, Hindalco's update was also very good.
Correct, 6.5% up move on Zydus Life. You know, Zee Entertainment, 4.5% down take. You know, Advent Hotels. The charts have been very interesting with regards to Advent Hotels as well, if you have to look at the last couple of months, I would say, because very random moves is what you see on this counter. In fact, Chandan, let me take a question with you on Advent Hotels and Zee Entertainment. Both showing weakness today. What is your view?
Yeah, so talking about Advent Hotel, so yes, here the range bound bias is clearly visible. So not expecting major move. In fact, on the monthly chart, it has been making lower top, lower bottom. In fact, just couple of months back, it came as a listing. As if I look at the data, failed to surpass the previous month hurdle of 175, 177, turned lower. So looks weak, can go to 140, 135. Talking about Zee. Here also the structure is weak. Any meaningful bounce is being sold. Monthly setup is negative. We witnessed good recovery in the last month, but again, the momentum is just drifting lower, so avoid.
Yeah, and Z2 has cracked 83, you know, at every single point of time. from the journey of 250 odd and lower. I've heard calls talking about how cheap Zee is as an asset and how from this period, Zee will actually see some buying, rumors of HNIs coming in and logging in on the stock. And look at that wealth destruction that has happened in Zee Entertainment. Is it a reasonably priced media asset? Yes. The problem is that the earnings delivery is really all over the place, and which is not what you want, especially in a mahal like this. So I'm not surprised that this is happening with Zee. Chandan, I heard you talk about a couple of pharma names today. For a trader who wants to bet on only one, should she or he choose Mankind? Should she or he choose Wockhardt Pharma or something else at the current prices?
So yes, Nikunj, I
Neeraj. You're missing Nikunj, but this is Neeraj here.
sorry, Neeraj, I selected both, right?
No, but
because
that's what I'm saying, Chandan. If somebody has to trade only one name, which one would you choose?
yeah, and sorry for this word, because
Not at all. Nikunj is a dear friend.
Once the market opens, we are focused on the stocks. That how our viewers and the followers get the benefit of the same.
Yeah.
So try to understand the feeling and the emotions of the market. Quite positive on the whole Pharma and looks quite interesting. In fact, looking for an aggressive target towards 1700 to 1750 looks good. And again, if you want to diversify, you can take both also. So have same kind of conviction in both Wock Pharma and Mankind. If you ask one, then I'll focus with Wock Pharma.
Okay, Wockhardt Pharma. So same conviction in both. By the way, look at that Wockhardt, interesting. The Mankind Pharma chart, interesting dip, and that is getting bought into as well. So, well, good going. But why Wockhardt? We haven't discussed that fundamentally, but every passing month brings it closer to the fructification of the Zenith promise.
Yes.
What do you think of this one?
So there is a price anchoring bias, right? I have seen it at a much lower price when this was actually a promise. Now it is getting delivered. So I would stay away from it. But it is my own problem. It is not something to do with the stock.
Okay. You know, one stock I want to look at is a PTC India in terms of Q4 numbers as well. Profits have slumped, and this is in spite of that strong power demand. The stock is down nearly 8% in trade, because if you talk about the profitability downtick, 66 to 69% is what you're seeing. There is severe margin compression that has come in, and operational expenses have been pretty high this time around. Now, your summer heat wave, that has actually driven massive power demand, and that's what the street has been betting big on. But that's only pushed the company's revenues up by 30%. And this volume-led growth has actually failed to translate into bottom line gains, is what my read is over here. Your view, Parag, by anything on the PTC India? Because power as a sector itself, people have been betting big on right now. But you're seeing what's happening to this one. I mean, 8% downtick on the stock.
So basically, I don't track this stock, but in my view, in power sector, definitely some of the stocks which are doing well, Adani Power or NTPC or JSW Energies of the world, and but I would not extrapolate too much into this, power demand increasing significantly because of the summer and all that. In my view, the power assets are regulated ROE assets like NTPCs of the world, and now most of the power stocks are into long-term PPAs, Adani Power, JSW Energy, all. So they'll have a regulated ROE business, so they'll have to be measured on price-to-book basis. Of course, the growth is one of the other factors where some of these companies are expanding very aggressively, so we'll have to look into it. But I would say that it's a sector to watch, but I think the stocks have overheated in my view.
Okay. Well, all of you, thank you so much for taking the time out and being with us. Really appreciate your time and your insights, and great for some people to make money even in a market looking as skittish as it is this morning. So bear that in mind, that the tide is not in favor of the longs. We are also going to consider some short ideas, and you got one or two today. Okay, let's focus on, well, one of the companies in a sector which is, as Parag Thakkar said, looking like a space where everybody wants to log in, and that is healthcare. Now, Jupiter Life reported strong revenue growth in the fourth quarter. Margins and profitability though remain under pressure due to expansion-related costs. Before we speak to Ankit Thakkar, MD and CEO at Jupiter Life, my colleague Varsha joins in with more details of this. Varsha.
Well, yes, as you rightly said, revenue was strong, but yes, we did see impact on profit and EBITDA due to, the new hospital, that is Dombivli, which has impacted profitability due to initial losses. But expansion phase will lead to, near-term pressure, but long-term growth has been set up. Now, PAT impact was, of course, due to, labor code changes, depreciation and finance costs. Now, talking about the operating metrics, occupancy was at 61.2% versus 65% last year, and this lower occupancy is due to new hospital ramp up, and the borrowings have also increased to 500 crore from rupees 321 crore. This is due to expansion plans. Talking about the capex, lastly, they have a target to scale capacity to 2,900 beds, and aggressive expansion is underway across key cities. So key highlights, key question to management would of course be where they are seeing the ARPOB growth to be, and of course when the expansion that they are doing will see an impact on financials.
Okay, well, let's ask these questions to Dr. Ankit Thakkar, MD and CEO at Jupiter Life, Lifeline Hospitals. He joins in right now on the show. Ankit, thank you so much for taking the time out and being with us. This is Neeraj here. Good morning. Sum up how you expect how would you describe what the quarter of the year were like? Because it does seem that there has been growth, but because of the ongoing expansion, which is very welcome for the future, there could be alterations in the quarterly reportage continuing for the foreseeable future.
Hey, good morning, Neeraj. So this quarter has been quite eventful. We operationalized our Dombivli hospital in February ahead of schedule. It was supposed to come in Q1 of this financial year. We were able to operationalize it a couple of months in advance. So that came in naturally as a consequence of that. For the first couple of years, there is an EBITDA drag on account of any new hospital that comes up before it stabilizes and then starts contributing positively to the cash flows and bottom line. The other big thing which happened is that we acquired another land in Mumbai in BKC to set up a 400-bed hospital here. So these two big developments in the last quarter. Going forward, as you said, yes, next couple of years we'll see some drag on account of the new hospital, but that is just the nature of a greenfield expansion.
Okay. And for how, I mean, you are a growth company, and hence I'm trying to ask this to you. How do you take this decision of balancing out the growth, the need to do growth, and at the pace at which you do, versus the impact that it could have on let's say the operational metrics related to the targets that you may have for FY27 and 28?
So we have 3 new projects underway as we speak. We are building a hospital in Pune South. That will be our second hospital in Pune. We are doing one in Mira Road, and then BKC is just announced. Growth is kind of something which you'll have to keep on doing. And essentially, the way we look at numbers internally is to look at unit-wise performance. And as long as the existing units are not contracting in revenues or bottom lines, I think we are doing well. A consolidated impact on account of new units does not bother us because it is the nature of growth, as I just said. On the consolidated level, what we do is make sure that there is enough cushion available in the cash flows to also fund the new capex and also absorb the shock of the new hospital. So that is the way we look at growth.
Okay, Dr. Thakkar, good morning. This is Hira on this side. You've previously guided for what, a 2-year break even for the Dombivli hospital. Now, what is that specific occupancy or average revenue per occupied bed that you think will be required in FY27 to achieve that quarterly EBITDA break even as well? Because you said you are looking at it, at an individual level.
So we have the Dombivli hospital is built for 500 beds. We have operationalized 200 for now. We think that once we cross the 50% occupancy mark, we should be able to be at the EBITDA break-even stage.
And in terms of the EBITDA growth, if I have to exclude the Dombivli hospital, pretty strong at what, 24% is what we're seeing. Now, can we look at 23-24% as the floor for FY27 as well? Or will the future, say, pre-operative expenses for the other pipeline hospitals that you have cause additional compression in FY27?
So I think the three existing hospitals are likely to perform at similar levels. We don't really see why the existing hospitals should suffer in terms of revenue or margins. Dombivli, of course, as I have said earlier, is likely to give you some drag. So I have not really modeled the numbers, but there should be some drag on account of Dombivli, which will impact the overall margin.
I think notes say that cash burn at Dombivli could be about 2 to 3 crores per month.
On an average for the year, yes.
Okay, so you haven't modeled it, but you believe this is what it could be, right?
From our past experience, this is what we have seen when we built new hospitals.
Okay, now, so one thing that, Ankit, one thing that we are trying to ask all companies in the space that you are in is one, that the long-term growth trajectory is very well known. It could, the opinions differ from it being a 15% CAGR story for 10 years to 20% to even 25%. 20% is a bit of a stretch, I presume. But I would love to know, because you are in an expansion mode and a younger company relative to some of the others as well, what do you envisage your growth trajectory for the next 3 years, let's say, or the next 5 years to be like? Compounded annual growth rate numbers, and could the margin trajectory, where you have surprised in this quarter as well positively, could it actually inch higher along with growth over the course of the next 3 years?
So I'm a doctor, I run the hospital, I'm not an analyst, so I don't spend a lot of time on modeling CAGR numbers.
Sure.
The way I think of growth is in terms of new hospitals coming up, new capacities coming up. So in the next 3 years, as you said, maybe 4, if not 3, all the 3 hospitals that we have now announced should be operational, and leading to pretty much doubling up of our installed bed base. Going forward, I think there is just so much wide space available to add new greenfield hospital as our installed and operating base expands from 3 hospitals to 6 or 7. I believe there should be much larger cash flow available to accelerate the growth journey.
Having said that, Ankit, because you are the MD CEO of the firm, I know of nobody else to ask this question, and hence I'm just trying to understand. You may not have modeled it entirely, but is there a rough estimate? You would have had internal conversations about what's the kind of growth that you guys are thinking of or wanting to achieve? Any sharings you can give us there?
Yeah, as I said, definitely we think of growth and we have to have those discussions, but we think of growth in terms of bed strength addition and not really percentage. I mean, we could do the math at some point, but that is just not the way we really are tuned to think. In terms of bed strength, I know for sure we should double up in the next 3-4 years. I can also say that we are not stopping at that point. At a suitable opportunity as it presents, we'll keep on doing what we are doing, that is build more hospitals, currently committed to the Western India region and committed to this model of greenfield flagship kind of 300 to 500 bed hospitals.
Okay, Dr. Thakkar, I have a question for you in terms of the BKC and Mira Road outlays as well. There would be some outflows that will be happening for both of this in FY27. Will this be met with internal accruals, or you will be taking on an additional debt? Current, if I'm not mistaken, is what, 500 odd crores. So will there be an additional debt burden, or is it internal accruals?
So currently the debt is offset by the cash on hand. So we are actually still cash positive. We have a cash balance of about 50 odd crore and a debt of 500 crore. So currently we are still net cash. But as these 3 hospitals do come up, all this cash should disappear and we should be left with this 500 odd crore of debt. As a board, what we have decided is that we should have a self-imposed ceiling of 3 times of EBITDA as the debt levels. And we believe that this much debt should take us over the line for this round of expansion.
And my side, I mean, this is my last question with regards to the stock split. I know this is something that will improve your retail liquidity as well. But is there any thought process with regards to where an intent to raise further equity capital over the medium term? Because the kind of targets that you have is what, 3,000 bed scale. So is there any, intention on that front?
No, so as I said, the 3 hospitals that are already announced, internal accruals combined with debt at under 3 times of EBITDA should take us over the line, which means we don't foresee an immediate round of equity raise.
Okay, got it. Thank you so much, Dr. Thakkar, for joining in. Always a pleasure to speak to you. And this is the time where, you're seeing that entire hospital chain, which has, Neeraj, done the capex. Now it's all about execution in terms of getting everything up and running, and then in terms of getting or bearing the fruits of it. How quick that is going to be is the question, because all eyes have been on the hospital cycle since almost a year now, and now it's going to be with regards to where giving out the rewards to shareholders goes.
Yeah, but maybe they just want to expand at a strong pace simply because it seems that that's the people want to grab a pie of the market growth, and therefore maybe margins
somewhere will be soft. Yeah. That could be, that's exactly what is seen, right? Your top line is growing, but because of that continued expansion that you're seeing, that is what is compressing their margins to some extent. And probably that will be the story for some time now, till they come out of this expansion phase to some extent. But whether that will actually happen with hospitals or not is the question, because managements have been of the opinion that this space has been absolutely underpenetrated when it comes to the Indian markets. And that's the reason why there is much needed, even from a service perspective.
Yeah, well, let's see. Okay, so that's on hospitals. Let's now focus on some of the other names. And a bit of a drag today, not really on the markets, but in terms of the sentiment for shareholders, is Zee Entertainment. The stock is down and out 5.5%. Jasmeet joins in with what the numbers were like and what is it that brokerages are saying. Jasmeet.
Well, very good morning, Neeraj, and thank you for that. If you look at the overall performance in the Q4, we see a weak quarter coming in for the company, and even the brokerages have turned bearish on this particular counter with a reduced target price. If you look at something like an Axis Capital, this being on the better side, they have hiked the target price by 4 rupees to rupees 80 from earlier 76. Now, what they say is the overall revenue was missed on the estimates by nearly 4%, and the miss comes on the back of that ad revenue being down in this particular quarter. Well, to also make a note that the overall West Asian crisis impacted the overall Q4 ad revenue, and which will be a key concern to watch out going ahead. Now, I also have Nuvama on this, which is maintained by, but they have cut the target price to rupees 112 from earlier 133. While they also make a note that the EBITDA has come below the estimates. Further, they also cut the FY27 and 28 EPS by nearly 18% each. Now, if you look at the other key brokers, I have ICICI, which have maintained the rating, but they maintained buy on this particular counter with unchanged target price of rupees 120. While they see that the new business, the ZEE5, is a turnaround for the company, which has reached the break even. But apart from the ZEE5, rest of the business is suffering, and which is down in this particular quarter, leading to the overall impact. Well, lastly, Motilal Oswal also, they maintain neutral rating with a target price of rupees 80. While they say that this will end for overall FY26 on the back of that March quarter. Now, given the overall West Asian crisis impacting the ad revenue, the management also comments that this might be the impact going ahead as well. So they also cut the target price for coming quarters as well on the same view of Middle East crisis.
Wow, okay. Yeah, and fair points, Jasmeet, but just like we were talking about, it just seemed that for Zee Entertainment, I think the zing is completely gone out. I wonder what it takes to revive this asset and the sentiment around the stock price on Zee. Not saying that the asset itself is bad. What I meant by asset is the stock. And the stocks, the sentiment on the stock is just so woefully weak that, again, not necessarily at the March lows, but if you will, but still looking under pain in the session today. A lot of other stocks are, of course, looking under pain today as well. Okay, what else? There is a big policy push, likely, I'll use the term very carefully, could be in the works for India's EV transition. The government apparently is weighing a $1 billion incentive plan aimed at accelerating electrification of privately owned buses and trucks. No surprise, right, with what's happening around the world. Now, with the sharp focus on intercity operators is the key word here. Puneet Johnson with more details on this. Puneet, I don't think there's an official government of notification on this, but a fair number of agencies are talking about this, right?
Well, most certainly, and I think there is of course a big story coming in on a $1 billion incentive that could be announced, and this will be of course distributed over the lifetime of the bus duration as well. So that could be 10 to 12 years, but even a policy push initiative on those measures will be a very strong one, and this will be targeting their privately owned. So currently, out of the 100 buses that operate in India, 95% are now privately owned. So that segment has to be looked at very carefully. Currently, the EV bus market is largely, the fleet size of things is being looked at from the EV side. But this big share will be for intercity bus operations, and hence a big push for that side of the business as well. Now, there will be interest subvention at this point of time. That could be one of the key reasons considered, as well as some partial credit guarantee scheme also could be announced. So you will see a large push from banks, especially to finance this. And since it's coming from the top, from the government, banks will be okay to give a lot more funding to private vehicles and private companies as well to change up their fleet. Now, that is the other push that they're targeting. And finally, in terms of some of the key beneficiaries, right? Because we've spoken about the electric pure play bus makers like Olectra Greentech and JBM Auto, Switch Mobility, which is a subsidiary of Ashok Leyland, as well as Tata Motors. These will be some of the key beneficiaries, but this will be key for the private vehicles. We've also seen that state governments like Delhi have already given the mandate to schools, for example, of 30% of their bus fleet to be electrified by 2030. But all such measures are now gaining traction, and you could see that benefiting the companies that are already placed in that space right now.
Thanks for that, Puneet. Okay, we'll watch out for these as well. Now, the next conversation is about whether there is a turn in the offing for chemical names. And I mean, there's no reason to necessarily choose these two to compare, but I'm just trying to use profit pools and market caps to just make the point about what could happen ahead. Now, let's go to the first set of graphics. In March 2022, defense, the market cap of NSE Defense Index was about 1.7 lakh crores. Aggregated and aggregate revenue pool was about 72,000 crores, give or take. I mean, these are approximate numbers, but in or around there. And then you move on and fast forward to today, the revenue has gone up by 70%, not bad, to 1.2 lakh crores from 70,000 crores. The market cap, though, profit pools are, of course, at 23,000 crores. The market cap of the defense names have moved up to 12 lakh crores. This is up 7x. So just see the PE multiple re-rating or EV EBITDA multiple re-rating or price to sales re-rating that has happened for the defense names. Now, I mean, you think of what therefore chemicals could do, and maybe we won't spend too much time on chemicals, but just remember that for chemicals, it's actually the opposite. Chemical and fertilizer is available at an aggregate market cap of 10 lakh crores currently, but the aggregate profit pool is much higher than what the defense names give currently as well. So keep that in mind. And peak profit pool in 2022 was 40,000 crores for chemicals, and the aggregate capex in the last 4 years is about 1.2 lakh crores. I've borrowed this from a couple of fund managers who've done this work as well, but these are aggregate approximate numbers. Keep that at the back of your mind. But what we should do effectively is look at this plate before we go on to the analysts we have, or the expert that we have on air. The divergence between the two sectors, profit growth, market cap, explosive versus flat and contained. Valuation is very rich for defense names versus what's there for chemical names. And the narrative is for a future growth story versus cyclical recovery story for chemicals. But the focus is this, of this conversation. And if we can just take the first plate back on the screen, which is about defense, and let's focus on that sector and try and understand whether defense is now starting to look a bit expensive, or is the future growth story accounting or compensating for that expensive nature of the index. Ankit Sonia from Mirae Asset Share Khan with us on the show. Ankit, thanks so much for joining in. And I would love to know, Ankit, when you think of defense as a sector now and look at the trajectory that the stocks have traveled through for the last 2, 3, 4 years, is it bordering on expensive, or is it bordering on expensive with reason?
So, with respect to, hi, good morning. Thanks for having me here. With respect to defense, the defense always have been in a way the execution. There's slowdown. There's lower in the executions, but always. It's a long-term growth story always, and with respect to the order books, if you see all the order books are at the peak right now, and if you do see the revenue visibility, it goes off around like till 2032. So this is always going to be the situation around with respect to the valuations shall be little higher on the front, but longer term story growth story remains intact.
Got it. Okay. So, Ankit, having said that, and you're right that in some sense they will always be expensive. Do you sense that? And I'm not saying it is. I'm just asking you for your opinion here. Do you sense that the levels now are at stratospheric levels, or they are still at levels wherein investments or fresh investments into a basket of defense names could actually yield good results because of execution?
So yes, we believe like a few players in and around. I believe we have a coverage on the big players, which is BEL and HAL. Those will be a good set of investments out there. And recently, I believe Apollo Microsystems is also having a good set of numbers out there. We do not have coverage on that, but to be looked on to in terms of defense numbers.
Ankit, good morning. This is Hiral on this side. Now, help us understand, you mentioned about the kind of order books that all of these companies are sitting on. Realistically, if you have to look at the conversion, how much are you going to see in terms of FY27? Because 3 to 5 times is the kind of revenue size, if you have to look at the order books right now. And this is specifically the public sector undertakings.
Yeah, so we broadly expect an, I believe, 15% CAGR growth in the revenues, and we clearly know that this is a long-term story, and any sort of execution, only risk is the execution delays if there's anything. Suppose if it is Bharat Electronics, they've delivered broadly a good mixed, I mean to say, inline performance with what they have been guided. Broadly a little bit on the superseding front also. So if you see over a period of time, this will be there. I mean to say the CAGR of 15% around, and a bit of margins improvement with respect to BEL and HAL could be seen around. And then those could be a good bets to look in.
Okay. So in terms of FY27, if you have to look at execution, because that becomes the key, if you have to look at valuations and basis both of these matrix, give out your top picks in terms of what could lead. Would you really go with, the private sector defense players, public sector defense players, if you have to distinguish between the two, and if you have to add the shipbuilding side of it as a separate one?
So maybe I may not be able to give you a view out on the private players as such because we do not have it in our coverage. So we have HAL and BEL, and we would be recommending both as an topics. BEL being giving a broader set of numbers with a basic CAGR growth of around 15%. HAL, the key monitorable will be the execution of the Tejas Mark 1 deliveries, which management is saying that they'll be ramping up from around in August or September. If that is clearly executable, then that stock is to be bet on.
Okay, so HAL, BEL, two stocks that Ankit's talking about. Thank you so much for joining in. It's always a pleasure to speak to you and get your views. But it's interesting to see how the shift is happening between the private and the PSU space as well, because the private players are now rapidly moving from component manufacturing in the defense space to, say, probably complex system integrators as well. So that's that shift we are seeing, and that's what is bearing fruits for the private players as well in this segment. But moving on to the real estate space, the sector is one of the top losers today, and yesterday was one of the top gainers as well. And Puravankara has reported a strong set of numbers. The stock, though, down 3.5%. There has been sharp growth in revenue and profitability. Let's understand from the management, but before we go there, let's get in Mahima to talk to us about what are the key highlights and the key talking points that one should be watching out for. Mahima, over to you.
Right, so Hirar, as you rightly mentioned, Q4 was a strong quarter for Puravankara. Highest quarterly collections in the past 3 years is what they saw in Q4 FY26. Top line was largely aided by increase in handover of units, which increased to almost 1,300 versus that of 671 in Q4 FY25. Subcontractor costs, of course, did increase by around 39 points, but profitability has also increased significantly. Now, in terms of operational metrics, sales volume saw a growth of around 112% this quarter. Customer collections went up by 36%. Average realizations also saw a growth of 37%, and units sold also saw a growth of around 84%. So I think a large part of FY26 growth has come in from the last quarter. I think the key questions here would be to kind of understand as to what FY27 looks like, considering that there could be cost pressures going forward, and what is the pipeline and debt payment schedule looking like.
Okay, thank you, Mahima, for that. In fact, let's get in Mr. Malana Sasalu, CEO South Puravankara, CEO South from Puravankara joining in. Mr. Sasalu, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. If I'm looking at the numbers, highest quarterly sales is what the company has reported. Profit numbers also looking pretty strong. So Q4, exceptional. However, if I have to look at the full year, there has been little bit of I wouldn't say a stretch, but there is a slim number coming in from a FY26 perspective, and the guidance that you have for FY27 seems to be very strong. Help us understand what actually was the pain point in FY26, which you're seeing go away with in FY27 for this kind of a number.
Thank you, Hiral. Thank you for having me. It's always a pleasure to speak to you. Yes, we had a fantastic quarter. We're very pleased with the outcome of the last quarter of the year. This was because of two fantastic launches that we had. One in Mumbai, Purva Ester, and also in Bangalore, Purva Northern Star, Northern Lights. Two projects that we got launched, and we did extremely well. The things that went very well for us in the last year was the last quarter, as I said, and the things didn't go so well was the first 2 quarters, because that we had some launches problems because of some of the regulatory issues that were there in Bangalore, like the e-Khata, and also that Bangalore got into the divisioning of the formation of Greater Bangalore Authority, and so on and so forth. So finally, we got into the good mode in the last quarter, and that saw good numbers. And I think, in my opinion, that we ended the year very strongly with a growth of around 7,400 crore rupees of sales and a CAGR of around 40% compared to the previous year, and also around 4,260 crore rupees of collection and 3,850 crore rupees of revenues, showing that our execution overall was very strong. We handed over units, and we delivered a good EBITDA numbers as well, at somewhere around 21 and 22%. And I'm really pleased with the quarter that what happened there. Coming to the FY27, where the positives that are going for us is that some of the projects that we couldn't launch in FY26, they're going to get launched in FY27. So we have given a guidance of around 11,200 crore rupees for the FY27. That is because we are launching projects for some 24,000 crores in both locations in South and the West. So, and that is the reason. And also, of course, we're quite cautious about what's happening in the larger context of economic scenario, because of the macroeconomic scenario and what's happening around the world. But given that, the resilience in market and the preparedness that what we have done for the next year, and I think we should be able to be there to get to those numbers.
So that's optimistic. FY27 sales guidance, 11,200 odd crores. That's a massive 51% growth that you're staring at. To achieve this number, what percentage of the outcome will rely on the 21 million square feet pipeline that you already have right now versus selling the existing inventory?
So basically, in an overall portfolio basis across the country, and we are somewhere around 54% of the sales are coming from the new launches, and the rest of the things are coming from the sustenance. In Bangalore, though, is around 62% is coming from the new launches, and 38% coming from the sustenance. So I think we've reached a stage wherein the sustenance and the new launches are getting closer to each other. And our idea would be that probably in the next year, by the end of FY27, that we should be reaching somewhere around 70% coming from sustenance and 30% from new launches whenever we give guidance. And that would be our approach to business.
Mr. Sasalu, is there any possibility of a chink in the armor because of the lower economic growth and therefore the demand for the markets and the nature of the properties that you are in?
I'm quite optimistic about what is happening, what about the India growth story, and also the internal consumption that is still strong in India. And of course, what is not in our control, we couldn't control that. And whatever happening in Gulf, and the fuel prices going up and the effects of that and how that will all pan out. And we're cautiously looking at it. We're studying that, and maybe in the next 2 to 3 months, things will unfold. And I hope and I'm optimistic that it will turn out to be for good for the world and for the country and for everybody. And the other side, when we're talking about the assets which are being launched, that if you look at what's happening in Mumbai for us, these are all not so easily, the alternatives are not available. These are all marquee projects that we are launching in Mumbai. And in coming to Bangalore, Bangalore has always been a end user driven market, and we are in that sweet spot of somewhere around 12,000 rupees to 15,000 rupees per square feet on saleable area, which is in highest demand. And also that what's happening in Bangalore, if you look at last 1 year, the commercial office space offtake is fantastic. And it is also continued in this year as well in the first quarter. So overall, that it should give me that kind of positive mindset at this stage, that things will be good even next year as well.
Oh, got it. Okay. Would you need to do any kind of fundraising over the course of the next 12 months for executing or inorganic moves or otherwise?
See, there are the 3 types of fundraising that usually happens.
I meant equity fundraising, to be very honest. You can explain, but I'm just telling you where my nature of my question is coming from.
Perfect, and I will answer the question directly the way you asked it. Probably, a thing is that I think we feel that there is a greater value to be unlocked as a company in the open markets. And so till such time that we see that we are priced fairly to be looking at any kind of equity raising in the market will not happen. And we are confident with the position that we are at this point of time. We are very happy with the growth that we are seeing. And unless that we see a fair value, the equity dilution is a little bit far off.
Mr. Sasalu, I will pick up from Neeraj's first question where he's talking about the economic impact or the downturn that we're seeing right now. Yeah, probably no impact on demand so far, but do you think that could have a bearing in terms of the pricing structures across? Because right now the realization cycle is probably a super cycle for all the developers, I would say. The average price realization, you've seen a growth of 37% on a year-on-year basis. How are you anticipating that aspect move in the next, say, 3 to 6 months or even 12 months?
And I believe that the growth that what we have seen, that we did not have any kind of price increase since 2014 to 2022. And that demand, that price correction happened between 2022 to 2026. And I don't expect it to be going up consistently like this. And what I believe so is that the real estate will always beat the inflation numbers. So anything that above 6%, 7% per annum, we are very happy with that kind of a price increase. And I believe that's going to happen. So I'm not unduly worried about the pricing side of the product.
Okay, so not really worried about pricing. Probably then the strength will continue in spite of that economic downtick that everyone is looking at as well. But thank you so much for joining in. Always a pleasure to speak to you as well.
Thank you very much for having me.
Very quickly, we'll address the markets as well right now. There has been a mild recovery that we're seeing from the way we opened up. Somewhere near, 0.5% downtick is what you're seeing, but we've reclaimed that 23,500 mark on Nifty 50. Let's pull up Bank Nifty as well, and then we'll quickly look at the broader markets. Bank Nifty, again, I mean, not as strong as what it's in terms of Nifty 50, so the setup is seeming to be as weak for the Bank Nifty components as well. And in terms of broader markets, you're seeing the mid-cap 150 also near the highs, along with the small-cap 250, but all still trading in the red. So interesting day of trade, but we'll quickly slip into a short break. On the other side, we will have Harsha Upadhyay of Kotak Mahindra AMC will be joining us to talk to us about the markets, and Neeraj will be setting this up for us in terms of what could one really expect. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Back with India Market Open right here on NDTV Profit. Pull up the markets for you. We had seen a bit of a recovery from those lows of the day. Again, kind of giving way, but not as bad. Now, this bit of a template here is that the market is not liking too many highs, getting sold off, yes, but well, even the lows are getting bought into. Now, one of the beliefs, by the way, viewers, and that's going to be our opening question to Harsha Upadhyay. He joins us on the show. But one of the beliefs is that if bond yields are higher across the world, is that a call for action, for peace to come in? Now, look at this. Treasury yields, 10-year yields, this year thus far, this is data that I borrowed from my colleague Sharad, and YTD, US up about 49 basis points, Japan 73, and Japan is a big one, by the way, but India too, about 52 basis points, if I'm not wrong. South Korea, UK too have had bounces 80 and 65 basis points respectively. And typically in periods like this, while we expect for some call to action for resolving and bringing the yields lower, it's in the US interest to do that. Portfolios need to be aligned accordingly as well, because you're possibly looking at higher interest rates, maybe lower liquidity, so on and so forth. Let's ask Harsha Upadhyay what he would do in a scenario like this. He's CIO at Kotak Mahindra AMC. Harsha, great having you as always, and just the perfect day to have you, because while a conversation about a month and a half ago would have centered around the conflict and higher crude prices, now it also has the added dimension of higher yields across the world and possibly higher rates coming in as well. Would you believe that will be the base case now? And if so, how should portfolios align themselves?
Good morning, Neeraj. Yes, clearly, I think the disruption has gone on longer than most people anticipated. So to that extent, I think now we are seeing ill effects of the transportation crisis that is leading to higher energy prices, which is once again leading to higher inflation and higher yields across the board, across the globe, right? So to that extent, yes, usually whenever yields have moved up in such a sharp fashion, we have seen some action from the policymakers, from the government. So that's where I think there is a section of the market which believes that maybe this will force some of the decision makers to kind of resolve the current conflict. However, one needs to keep an eye on the yields that have moved up so sharply in the recent times. And of course, if it continues to rise, then of course, that's a negative indicator for the markets. And of course, in a crisis, it's very difficult to say that which valuation level is the right level to invest without fear, etc. However, we have also seen that whenever you invest in a crisis and you hold it for the reasonable amount of time, let's say medium to long term, you end up making money after the crisis. So the long-term investors need to believe in that and continue to make those disciplined investments. But if you are a trader, of course, this is a market which is full of news and you can get whipsawed very quickly.
Most certainly. But Harsha, do portfolios need to align? Okay, the backdrop to my question is that because it is becoming difficult to predict when will the conflict end, you invest with the status quo in mind, right? Because you can't quite predict that conflict will end in 1 month's time, and therefore let's align portfolios that way. So therefore, do you align portfolios or the construction of the portfolio with what is currently present at hand, which is higher crude prices and higher yields? Or do you construct a portfolio with a belief and a hypothesis that at some point of time this will change in the next 2-3 months, and therefore construct the portfolio accordingly?
Clearly, this is not going to go on forever, that's for sure. So to that extent, you need to be positive. But again, it's anybody's guess whether it's going to take a few more weeks, a few more months, nobody knows. So to that extent, it's better to keep the portfolio diversified, not take too aggressive risks, because the moment you take aggressive risks, then timing becomes really a critical point in terms of how that portfolio is going to work. So it's our belief is to keep it diversified as far as possible. And as clarity emerges, then you may pay a price for a slightly higher clarity, but you will still be able to take some of those aggressive positions. So our philosophy has been to remain more or less fully invested and keep it diversified across sectors.
Okay. Harsha, good morning. This is Hiral on this side. When you're talking about treasury yields also, which are inching higher, yes, there is downward pressure, on your capital-intensive, rate-sensitive sectors to some extent. However, a relative boost that could probably come into your export-oriented or defensive sectors. In that kind of a scenario, is there a churn that you're looking at as well that could be happening?
Currency depreciation positively impacts exporters and they will gain out of this. But we also need to keep in mind that the entire geopolitical situation has changed, not just because of the war, but even earlier as tariff discussions were happening around the world. So it's not going to be simply a question of how competitive your currency is. There are various other factors that are also going to play on the exporting front. However, yes, all else being equal, currency depreciation help some of these companies. And of course, since geopolitical conflict in one way or the other has been continuing across the globe, the defense exports, whatever one could do, can also get a boost. Yes, these are sectors which will positively get impacted. But again, as I said, it's very difficult to take very aggressive calls on these sectors as well at this point of time.
Okay. And the other question I have is, everyone has been talking about Q4 numbers, the way they've panned out and what it would look like, at least in the first half of FY27. Corporate earnings, again, probably there could be pressure when it comes to margins, even in the first half of FY27 because of the supply chain constraints that the companies and industries have been facing. So according to you, which underlying sectors have the highest earnings upgrade potential to drive the potential cyclical rebound that could come in as well in the near future?
See, I don't think investors are looking at short-term earnings trajectory at all. Of course, Q4 until now has gone on more or less as predicted. If you look at Nifty basket and the results that have come out until now, the average earnings growth for the quarter on a year-on-year basis would be about 7.5-8%, which is broadly in line with expectations. We have not seen much of disruption caused by the current conflict on the earnings front in Q4 at least. However, there will be a set of companies which will get impacted in Q1 and maybe even in Q2 if this extends for a longer period of time. However, assuming that the crisis ends, I don't think investors will be too keen to know which are the sectors which will do reasonably better in Q1 and hence let's go on position there, or which are the sectors which are likely to disappoint and should be reduce holdings, etc. I think the focus will be more on post the crisis, what's going to happen and how the rest of financial year 27 or financial year 28 will pan out will be the questions to answer. From that perspective, we do believe that overall earnings growth, while it may get impacted in Q1 and maybe a little bit in Q2 as well, and different sectors will have different kind of impacts. Overall, we still be in the double-digit zone for financial year 27, assuming that in the short term we are going to see a resolution. And financial year 28 again will be sequentially better than financial year 27. With that in mind, I think one can still go ahead and look for medium-term wealth creation in the market.
Okay. Harsha, we were just trying to look at sectors which have gotten beaten down for the last few quarters/years, and is there a cyclical uptick possible in some? It did seem from conversations and some profit pool numbers that chemicals might be in that bucket. The commentary from a clutch of those names that have come out with Q4 numbers as well have pointed to continued gains, which probably points towards not just inventory-led moves, but even otherwise. Are you constructive this set of stocks or no? Why or why not?
Of course, Neeraj. Chemicals is one of the spaces where we have been holding overweight position in our portfolio. Maybe for the last few quarters, it has not panned out the way everyone expected. There was a bit of pricing pressure. There was inventory destocking that happened and various other issues which really didn't help the sector. But now we seem to be seeing a clear recovery in terms of the overall demand supply situation, and also the anti-involution that China has been talking about will lead to some amount of inefficient capacities going out in certain chemical streams, which means that the excess supply that you see from time to time from those pockets will also get reduced. Demand has continued to be reasonable. The inventory destocking is behind us. So we should be looking at higher demand supported by higher pricing and higher margins. But of course, just like many other sectors, this sector is also impacted because of the geopolitical issues. So to that extent, you need to build that as well in your thesis. However, if you are looking at next 2 years, this is a segment which will probably grow at a higher pace as compared to the average market earnings growth. So to that extent, yes, having overweight stance on this sector should help.
Okay. So that's with regards to where chemicals is concerned. Harsha, if I have to look at it between large caps and broader markets, valuations much cheaper as compared, if you have to look at large caps versus your broader markets are still on the steeper side. If you have to look at a change of direction that's happening, at what valuation do you think that Kotak Mahindra AMC will start getting aggressive in terms of the broader basket?
We are clearly favoring mid caps along with large caps at this point of time, which was not the case maybe a couple of quarters back. We were not so comfortable on anything apart from large caps at that point of time. But now, as we look at it, even mid cap valuations have come more or less near 10-year averages. So, to that extent, any portfolio having any combination of large caps and mid caps should be a decent portfolio at this point of time. Of course, large caps are trading at a better valuation as compared to mid caps, compared to their own history, as well as on a relative basis. However, the expected earnings growth, assuming the crisis ends shortly, we should see higher earnings growth for mid caps as against large caps. So, to that extent, maybe a slight premium on mid cap portfolio or mid cap stocks is a reasonable valuation zone, I would say. So, yes, clearly, the current consolidation or a little bit of downtick that we have seen in the markets over the last couple of months has opened up more opportunities in the mid cap segment. And large caps, anyways, we have been positive. So the overall universe has definitely has got enhanced in the recent times, I would say.
Harsha, leave me with where is it that you are the most overweight on currently? Okay, let me rephrase my question. If you closed an NFO today, which is let's say a multi-cap NFO, and therefore you have the flexibility of investing across market caps, and if you had to create the portfolio afresh in that scheme, where is it that Harsha Upadhyay would put the biggest overweight at the broader end of the spectrum?
Probably in that regard, we will still keep small caps at close to the lower limit of about 25%.
Okay.
And the mid caps probably slightly higher than large caps at this point of time in the rest of the portfolio.
Okay. And sectorally?
Sectorally, we would still be very diversified. We think that the banking and financials being one of the largest weights in the index has to move if market has to move. And also, some of the negatives that have really pulled down the sector in the past may not remain so going forward. For example, last year, we did see 125 basis points of interest rate cuts, which impacted net interest margins for most of the banks. That's unlikely to continue. The credit growth, which was quite weak, has started to go up. And with the expectations of a slight higher inflation, the nominal GDP should also be higher than what we expect. So overall credit growth should inch up. And it's already in the band of, let's say, 15-16% at the system level. So both growth and margins should be fine for banks. And if crisis ends soon, I don't think that will lead to any asset quality issues as well. So that's one of the segments. Apart from that, we discussed about chemicals where we have been overweight. We are also positive on some of the sectors which are not at all impacted by the war or the blockade that has continued. For example, telecom, power, etc., or the segments which are not really impacted by any of this. So I think there are quite a bit of sectors that you can really choose and place your bets on a diversified basis at this point of time.
So interesting sectors that Harsha is mentioning. Thank you so much for joining in. Always a pleasure to speak to you and get your insights as well. So that's Harsha Upadhyay, CIO, Kotak Mahindra AMC joining in as well. But moving on, let's quickly just look at markets right now, what's happening. If we can just get the Nifty 50 intraday chart, and then we'll look at the contributors as well in terms of today's session. It has slightly again cooled off from the day's highs, but pretty much, a flattened line is what you're seeing in the last couple of minutes. HDFC Bank, ICICI Bank. So again, it's the private banking space, which is putting pressure. BEL, which is interestingly adding that pressure as well. But categorically, Hindalco, Bajaj Auto, ONGC are on the positive side as we speak. But moving from here on, Bharti Airtel. Now, that stock has been in focus. In fact, this week itself, that stock actually became the second most largest in terms of market cap. And that was the interesting one to watch out for. And now they're looking at, looking at a high value postpaid subscriber base and looking at improving their customer stickiness as well. For this, they've actually launched a priority postpaid service that promises a faster, more reliable and consistent network experience for users. What does this really mean for the industry overall? Somit joins us with all the details. Somit, over to you.
Right. So what Airtel here has done here is that they have launched the priority service for its postpaid customers. Now, what does this mean? It means that there would be a separate network available for specific user segment. And how does Airtel plan to do this? Because of the standalone 5G technology, this empowers mobile operators with advanced feature like network slicing. And because of this network slicing technology, operators will be able to dedicate a separate network to specific user segment. Now, how does this benefit a user or a customer? It will definitely lead to superior service quality in terms of better network and higher data speed when connected to standalone 5G. Now, why Airtel is doing this only for postpaid and not for prepaid? Because if it does for everyone, then again the network would be congested. So hence they are choosing to stay with postpaid because postpaid customers yield higher ARPU and also exhibit a lower churn rate as compared to what we see when it comes to prepaid. Now, what would be the financial impact on Bharti Airtel because of this move? Now, if you see at these the plans that Airtel has introduced, they are similar to what the current postpaid plans are. But this could lead to more postpaid users shifting from other networks to Bharti Airtel to enjoy this kind of premium service. Also, it could lead to migration of higher prepaid users to postpaid users who want to access superior network quality. Now, just to give some perspective and numbers here, Airtel's postpaid plan starts at around 449 rupees plus GST, while the prepaid plan starts at just 249 rupees, which is inclusive of GST. So, even if a prepaid user migrates to postpaid, then there could be an ARPU bump up. And if you look at the current ARPU for Bharti Airtel, that stands at just 257 rupees. So if more postpaid customers is something that Airtel gets, then their ARPU could significantly increase going forward organically. And this is without any tariff hike. What is the competitive positioning about this in the market? Vodafone does not have a standalone 5G network, so they cannot compete. Moreover, there is a risk for Vodafone given the fact that they also have higher postpaid customers on their network, and these postpaid customers could choose to switch to Bharti Airtel. When it comes to Reliance Jio, they have the largest standalone 5G network in India, but historically, their postpaid customer user base has always been on the lower side. And lastly, when it comes to regulatory risk, at this moment, analysts do not see any regulatory risk coming in from this superior network that Airtel chooses to operate. But earlier attempts of priority service were met with regulatory interventions regarding net neutrality. As of now, analysts are not expecting any kind of intervention, but it remains to be seen how TRI responses to such service such service that Airtel is looking to provide.
Okay. Somit, thanks for that. Important from the telecom perspective as well. The market's skittish, the bounce back also not quite living through, and don't blame the markets really. It's a big day from a global markets perspective because Nvidia numbers come out as well. So lots to unpack over the course of the day for Indian markets as well as global markets with the yields being what they are. But for now, we need to call it a day on this leg of India Market Open at least. So from Hiral, me and the team that put this show together, thanks so much for joining in. But stay tuned because Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani, and with me is Puneet Zaveri, and this is a show that gets all your stock-related queries answered. So start, sending us all your queries on the numbers that are flashing on your screen up there. But before we start doing that, also let's take a quick look as to how the markets are doing at the moment. Well, not a very good day for markets. Yesterday, per se, was slightly better as compared to how we've seen last week. But today, the Nifty 50 is trading around 0.3% lower at its day's high point, though there's recovery from the day's low point for sure. But we'll be watching out for as to how things pan out. And it's a narrow range of trade, 63 odd points is what we're seeing when it comes to Nifty 50. Let's try to pull the chart, the Nifty 50 heat map up and see as to what are the counters that are making it to the list in terms of both buzzers, both ends buzzers. You have BEL losing the most ground, 2.7% of a downtick on the back of its Q4 numbers. There's Tata Steel, which is also still under pressure, down 2.3 odd percent. Eternal yesterday did see a rally of around 2 odd percent, and today is seeing profit booking of around 1.4%. And I think that's the story with Eternal. One day it will see a run up, and then it will see profit booking.
So the rally isn't Eternal, is that what you're saying?
Yeah, probably. And there's JSW Steel, which is also seeing a downtick of around 1 odd percent. But on the flip side, you have Hindalco, which is up almost 3.26%. We saw Novelis numbers coming out. Bajaj Auto also up 1 odd percent. You have ONGC also gaining by about 1%. Reliance seeing an uptick of around just 0.6 odd percent. Let's try to pull up the sectoral heat map and see as to what sectors are doing right now. In the morning, you had the entire screen in red. At least Pharma seeing some bit of a leeway, but Pharma now has gained around 0.5% as we speak, followed by Nifty Energy, which is up 0.4%. But media continues to be the top laggard, down 2.1%, followed by Realty, which has seen profit booking in the last couple of days, down 0.9%. FMCG also down by about 0.8 odd percent, and Bank also down by about 0.6 odd percent. Bank, I mean, let's try to pull up the Nifty Bank because it's ranging in that 53,000 levels as we speak. So we'll have to watch out for as to how that fares as well, because it's a range of around 350 odd points today. So that's with regards to where the banks go, and the advanced decline ratio, because that gives us a picture as to what's happening in the broader end of spectrum, because largely the moves are driven by earnings or news flows, and you still have it in the favors of the bears as we speak, but the gap at least has narrowed, right, between the advance and the decline ratio. You have around 1600 odd declines versus that of 980 odd advances. So I mean, even the broad end of spectrum is not very lucrative today.
Yeah, most certainly. I think it's been a day of recovery in that sense, because I think at the start also just one Nifty stock, which was Hindalco, was in the green, now getting to the 19 to 20 mark. So hopefully that recovery mode essentially continues at this point of time, but the mid cap and the small cap also reflect that, and that's visible on the screen as well. So Mahima spoke about the advance decline ratio. Let's look at the mid cap 150, starting to see some recovery from the lower end, but still in the red, and the small cap 250 also at this point of time, where it's continuing to see that momentum in the red, very similar to the mid cap. But the individual names though, and we've been talking about it since the morning, that these individual names continue to dominate the market. So the BSE 500 also, while showing some strength today in certain key names, PCBL, Zydus Life, Balaji Amines are some of them. Prince Pipe on results also. There are subsequent losers also reflecting that in PI Industries, Zee Entertainment, IFB, as well as what we are seeing on Hindustan Copper and JK Paper as well. But that is the picture of the markets today as well. Let's start answering your stock related queries as well now. And let me welcome in our guest for today, Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, Senior Vice President at Georgette Investment. Both of you, thanks so much for joining in. Let me go across, start taking the first stock related query for now. And this one's coming in on Zydus Life. Our viewer Pavitra is holding 85 shares at the 1014 and asking what she should do with this counter now. So she must have bought it very recently or has been holding in for a while. Asking if she should hold on or book profits. Gaurang, a very good morning to you. Thanks so much for joining in. I don't know if you have this stock under coverage, but really strong results yesterday and that momentum continuing as well today. What's your outlook on the stock if you cover it, and if not, anything in the space that you like right now?
Thank you so much, Puneet, for having me on your show this morning. Good morning to all the viewers of NDTV Profit, to Vaishali, to you, and to Mahima and to the entire team. A small disclosure that all recommendations that I'll be sharing with you this morning on your show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Georgette, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have Trump and Iran in terms of peaceful resolution being documented, signed, seen, and delivered. There are a couple of sectors which hold out, Puneet, and IT and pharma are the ones. This also is in the sweet spotlight because of the weak rupee against the dollar, because these two sectors have a tailwind positive whenever this situation erupts. As far as Zydus Life is concerned, well, if you have time by your side, and of course the numbers were slightly better than what we had estimated for Zydus Life. If you have time by your side, I don't think you should be any kind of hurry to exit the investment. Hold on for long term.
Okay, all right. So that's the view coming in on Zydus Life Sciences. In fact, the company also went ahead and announced a buyback, and we saw an uptick in the counter today. Today also it's gaining by about 5%. But moving on to the next one, which is coming in from Charan, who is writing us from Bengaluru, asking about Jyoti Structures. Now, comparatively, this is a small company with a market cap of around 1400 odd crores. Vaishali, he is holding 340 shares at the levels of 32 and wants a view on the charts from a slightly long-term perspective. Any view that you can give?
Hi, very good morning, Mahima, Puneet, and Gaurang. So starting with Jyoti Structures, I think the stock is currently taking support at around 12 levels. I think continue holding because this stock has seen good activity and it is just showing signs of bounce back. So I would say on a broad base, 10 should act as a support. And if this above 14 rupees, this can go for a further upward going towards 18 and 20 and so on. So as risk ratio is favorable, 10 be the stop loss.
Got that view, Vaishali, and welcome to the show as well. The next question coming in, and it's a disputed one on IT. Coforge is the one that Birandeep is asking on. He's holding shares at 1230 and asking if he should book profits now or wait, wait for some more time at this point of time with this counter. Gaurang,
Yesterday was a day of recovery in IT, but what's your view post, the earnings season? Do you feel that there are selective names that you could get bullish on? And what's your view on Coforge as well?
Well, so Puneet, I think couple of stocks from the mid-cap IT universe were in the spotlight for all the good reasons. Coforge was one of them. Yesterday we saw 6% uptick with names like Tata Tech. And like we were discussing about Pharma, I mentioned about a tailwind positive for IT, being rupee lifetime low against the US dollar. 1600 plus is the target from a long-term point of view for Coforge. Puneet, and I would also like to make one disclosure that, 5-10 years back or maybe more, the kind of run rate in terms of delivery on investment that IT used to give, that is in the rearview mirror now. That will not be, replicated again, given the challenges in terms of innovation, complex tools, and AI. Companies will have to reinvent themselves to keep up with the competition and the changes. Companies who don't will possibly fail and fade. Companies who can will shine and prosper. So as of now, continue Coforge. 1600 plus, review your position.
All right, so that's the view coming in on Coforge. The next one is also a long-term query, Gaurav. This is on Bajaj Housing Finance. Our viewer Balaji from Chennai is holding around 1200 stocks, bought at the levels of 108. Wants to know if we can continue to hold this for the next 5 years. What's your view?
So Mahima, we're positive on the sector. We like two names, LIC Housing Finance and Canfin Homes. And though, Bajaj Housing Finance, when the IPO came, Mahima, it came after almost a decade, correct me if I'm wrong, from the group, Bajaj Group. And the stock is currently languishing below its IPO price. Again, I stand to be corrected if I'm wrong. We don't cover Bajaj Housing Finance, but like I said, we are positive on the sector. LIC Housing Finance and Canfin Homes are the two names. One word of cautious immediately in the short to medium term because of rising inflation. The estimates or calculations or the mathematical approach that we did at the beginning of the year in terms of interest rate cuts, because of inflation moving up, I think we are in a pause right now, as mentioned by the Honorable RBI Governor last time in the credit policy. In case if inflation inch up, I think we'll have to revise our calculation in terms of higher interest rates. In that kind of a scenario, interest rate sensitive sectors and companies will be a little bit negative overhang from short to medium term.
Got that view, Gaurang. It's going back, to those lows that we saw at the end of March, roughly around 78, went down to 75 as well. But that's Gaurang's view on the space essentially of what's to look at as well. But next counter coming in on Bank of Maharashtra, and our viewer Ash from Patna actually is holding shares at 77.8. He's holding 5,000 shares for the short term. What would you recommend here, Vaishali, on the charts? Is there any view? I think we see.
Well, so chartically it is in good.
Yeah, Vaishali, go ahead. I think there's some lag in your internet connection, but we'll give it a go.
Yes, so it is chartically, it is quite in a good uptrend, and continue holding because it is just a regular retracement. But however, keep a stop loss of 75 because in all likelihood, this can retest 85 and perhaps even higher, go towards 90-95.
Okay, all right. So that's the view coming in on Bank of Maharashtra. The next one that we have is on Bellrise Industries. Now, Sharath from Bengaluru says that he has around 755 odd shares at an average price of 171. Wants to know if he can go ahead and accumulate more at the current market price. That we have is on Bellrise Industries. Now, Sharath from Bengaluru says that he has around 755 odd shares at an average price of 171. Wants to know if he can go ahead and accumulate more at the current market price from a 2-year perspective. Gaurav?
Clearly, so I won't give any specific in terms of buy, sell and hold. I'm sorry about this.
Anything on the charts, Vaishali, that you like for Bellrise? Because we've seen a very stellar move since listing as well. And, we're flashing that 132% from that issue price of 90. Anything on the charts for you?
Well, it looks very buoyant, and I think even currently it is just consolidating. So if one has to start buying, I would say wait for a little bit of a dip, perhaps up to 190, 200 levels, and that would be the level to get into the trade, because that can be a good fresh entry level, and look for a target of 250.
Got it. Well, 250. That's going to be a good target for Bellrise, and has been in a one-way move as visible on the charts, up 114%. Right, 250. That's going to be a good target for Bellrise, and has been in a one-way move as visible on the charts, up 114% right now. But let's go across. Take another caller from New Delhi, and Sanjay is joining in for a stock query. Sanjay, very good morning. Welcome to the show. What's your query?
Yeah, my query is regarding Ashiana Housing, which I bought it, say, about 2 years back on my anniversary in September 2024. 500 shares at the rate of 368 rupees, 65 rupees. It has come again after 2 years again at the same level. What should I do? Matlab, either I should exit or shall I wait for any such profits in it? It's almost exactly more than 2 years have been passed away.
Got it. That's a view and a pertinent one at this point of time. But Gaurang, I know you gave a view on the housing finance space and in terms of that question. But anything that you for Bajaj Housing, but anything that you have on Ashiana Housing by any chance, and if not, what's in coverage for you in that space?
Well, so I'll let Vaishali take this because we don't have a coverage. And like I mentioned, Puneet, amongst the housing finance companies, we are positive on LIC and Canfin Homes. To give this gentleman a word of pacification or comfort. So while your investment didn't do anything over the last 2 years, markets have also not done anything, Puneet. So no complaints.
Got that view, and I know it doesn't help directly on that question, Sanjay, but hopefully you can see a little bit more in terms of the results when they come in Q4. Let's go across and take another query then, and this one it's coming on Fujiyama Power. Go across and take another query then, and this one it's coming on Fujiyama Power. It's a recent listing, has done well for investors, and our viewer Rajesh has actually bought it at 287. And let's look at the 1 year chart also. Of course, it's not listed in the last year, but the long-term chart also. He's holding 50 shares. Gaurang, anything on coverage for the renewable energy or that space? And there you go, the 23% return for since listing for Fujiyama. But anything that you like, Gaurang, in that green energy space, renewable space? Anything that you like in the solar module space? What's your topic?
So amongst these, on Fujiyama, no specific comments, Puneet, since we don't have coverage, but we like the sector, and Puneet, our view is that with the ongoing conflict, which has resulted into a little bit of more negative impact on our country because of our dependency, I think government is going to do a lot more in terms of renewable, clean and green power. Two names appear over there, Bharti Energies and Suzlon. We're positive on these two, but other power generating companies have also gone into solar and wind. For example, Tata Power has stepped up quite well in terms of solar. They have made some deep inroads in terms of semi-urban and rural India getting a good market share. So we remain positive on these names.
All right, so that's the view coming in on the entire power space. But I think we've got Aruna who's calling us from Hyderabad. Aruna, very good morning to you. Go ahead, ask your question.
Hi, very good morning to all of you, ma'am. Thanks for taking my query. I'm having Angel One of 1,000 quantity at 280 average. So, yeah, what is the long-term and short-term view on this?
Okay, got your question, Aruna. And by the way, Aruna, we've been, getting viewers have been asking us and have been pointing out that you've been calling us from different numbers and using different names. So I'll suggest you don't do that. We generally take one query per viewer every day. So we'll request you to stick to that. We'll of course take your calls, but please stick to one query per day. That's a humble request. But I'll take up your query today with Vaishali. Vaishali, your view on Angel One. She's been holding 1,000 quantity at the levels of 280, I think she mentioned.
is bought from lower levels, keep trailing stop loss of 305 because this is on a verge of a breakout. About 330, if this sustains, this can go towards 340, 345. So this is the strategy for as far as the trading levels are concerned. So act accordingly.
Got that view, Vaishali. But the next question coming in from Ram from Chennai, and his question is interesting one on Barbecue Nation. Stock's not doing too well, but Gaurang, he's mentioning to us that he's been following, he's been following you from the Ask BQ days, which is of course the previous avatar for us, and he feels that you look younger and younger. I think there's a lot that we would also agree on. But any view that you have on Barbecue Nation, if not on the space, anything? He's mentioning to us that he's been following, he's been following you from the Ask BQ days, which is of course the previous avatar for us, and he feels that you look younger and younger. I think there's a lot that we would also agree on. But any view that you have on Barbecue Nation, if not on the space, anything that you like?
Well, thank you so much, Ram, for being a follower for such a long time. And yes, it has been a change of avatar, not only for the channel, but for myself as well, Puneet. Grays have been coming in, salt and peppers, the kind of thing right now. Having said that, amongst the QSR segment, one company which was one of the leading, we had a coverage during IPO, if I'm not mistaken, many years back, Puneet. I don't recollect it very well. But currently, we do have positive coverage on Jubilant Foodworks. The fact of the matter is, we had a coverage during IPO, if I'm not mistaken, many years back, Puneet. I don't recollect it very well. But currently, we do have positive coverage on Jubilant Foodworks. The fact of the matter, Puneet, is that our 140 crore plus population, 35% is young, and they have got some tickling taste buds for the offerings that these QSR companies offer. Won't go specific into Barbecue Nation, but yeah, we like the sector. Jubilant Foodworks is the topic.
Okay, all right. So that's the view with regards to where the QSR space goes. But the next one is coming in on consumer durable space. Our viewer Jaideep from Mumbai is holding 4,500 shares of Electronics Mart, which he purchased on at the levels of 149, and he wants to know whether he should continue to hold or sell. What's the overall outlook for the entire consumer durable industry is what he's asking from a 1 to 2 year perspective. So, Gaurang, I'll stick with you for this one. Your view on Electronics Mart and the entire consumer durable space?
So, again, a relatively new name. Don't have much inputs on Electronics Mart, but I'll give a brief about the sector and the current challenges, Mahima, that the sector faces in terms of input and parts. And that has been very well elaborated by companies which are into consumer durable appliances. So we have positive coverage on Havells, we have positive coverage on Blue Star, Voltas, Symphony. We had a subscribe recommendation for LG Electronics when the IP was there just some time back. So there has been a price revision, Mahima, over the last couple of months, and the verbatim given by some of the consumer durable manufacturing companies' management is that they are going to go in for price hike because the cost of landed goods or raw materials is the availability as well. So, we can expect a price hike in the next couple of months from these companies. Will depend upon how much each company is able to pass on and how much of it the company is going to take it as a sacrifice in terms of the profit margins. But we like the sector overall.
Okay, all right. So that's the view coming on consumer durable. In fact, Blue Star did speak to us very recently, and they've gone ahead and said that an 8% of price hikes is something that's already on the cards, plus a 5% going forward would be required considering how things pan out. So, you rightly mentioned, Gaurang, that price hikes will definitely be on cards for a lot of these consumer durable names. But moving on and taking a look at the F&O space, we have Sharad joining by to give us a perspective on what the F&O setup is looking like. Sharad, over to you.
Well, Mahima, it looks like it's the same exact copy of the last two trading sessions. We are still in a range-bound move, a little bit of consolidation, but yes, a negative sentiment is still weighing in, and of course, Reliance, a good recovery has come in. It's one of the top gainers in Sensex, Sun Pharma, L&T, M&M also, and a little bit of strength coming in from the IT stocks as well. But definitely, Eternal, Tata Steel and BL are under pressure. But yes, it's still in a narrow range, but there is still value buying happening in SMIDs, especially the Q4 number reactions are showing either sides a good momentum. But coming back to the FNO space, let's see what's there in the long build up here. Largely Zydus Life on back of earnings, and even Hindalco Novelis's numbers were very strong, and that's why we're seeing a good volume based buying across both of these counters. Apart from this long build up, let's also focus on the other stocks. That's the short build up. PI Industries stock is long build up here. Largely Zydus Life on back of earnings, and even Hindalco Novelis's numbers were very strong, and that's why we're seeing a good volume based buying across both of these counters. Apart from this long build up, let's also focus on the other stocks. That's the short. While for Ludha over here, we're seeing some kind of reversals there. Yesterday we saw realty stocks gaining in trade, but now a reversal. Long unwinding for Godfrey Phillips as well as AU Small Finance Bank. But remember, the signals are still in a very narrow range for most of the FNO counters. And short covering, interestingly, is coming in for Persistent Systems and Astral as well. We had mentioned about the mid-cap IT space for Godfrey Phillips as well as AU Small Finance Bank. But remember, the signals are still in a very narrow range for most of the FNO counters. And short covering, interestingly, is coming in for Persistent Systems and Astral as well. We had mentioned about the mid-cap IT space where the strength is still there, of course, over the last 2 to 3 trading sessions. So this is how the stocks are moving in the FNO space.
Thanks so much for that, Sharad. But viewers as well as Gaurang and Vaishali, it's now time for the rapid fire round in this edition of Fast Profit. Keep your answers as short as possible. The first one coming in on IRCTC, bought at 686 by a viewer, Tom. Vaishali wants to know what he should do with his 95 shares.
Exit.
Okay, the next one that we have is on Shriram Finance. Our viewer Vivek from Himachal is holding 50 shares at the levels of 1040. Should he continue to hold or average?
Pawan is holding on to HAL and is currently at an 8% loss. Gaurang, any view on what he should do now?
A strong competitor, no specific comments, but the order book is strong. Earnings visibility is much stronger.
Okay, Britannia bought at an average price of 5830. 10 shares is what Mano from Gurugram is holding for almost 2 years now. Can he continue to hold further? Vaishali, on the charts for Britannia?
Hold, and if it dips at towards 5,000, add more.
Our viewer Jigar is holding on to HDFC Bank at 650, so he's been holding on for a while. Gaurang, should he continue to do that? Is it a good time to add more?
Well, honestly, I don't know when he bought it because 650 is not the level I have seen in the recent times. We have a positive coverage, hold and add for long term.
Okay, Uno Minda. Gaurav, your fundamental view on this one is what our viewer is looking at. He's bought 35 shares at the levels of 1140. Average hold, exit?
Average sub 1,000 levels or closer to 1,000, we have a positive coverage for long term.
Vaishali, our viewer Mr. Rao wants to know if it's a good time to enter any of these IT names, TCS, Infosys, HCL, Tech Mahindra.
I think Tech Mahindra and Infosys.
Okay, Capacite Infra bought at the levels of 267. 1,000 shares is what our viewer Jawahar Babu is holding. Vaishali?
Tech Mahindra.
I think Tech Mahindra and Infosys.
Okay, Capacite Infra bought at the levels of 267. 1,000 shares is what our viewer Jawahar Babu is holding. Vaishali, your view on the charts, add or sell? Capacite Infra is what we're talking about.
Yes, I think keep a stop loss of 220.
Between Hindustan Zinc and Hindustan Copper, which is the right one to buy right now? Gaurang, would you recommend either of them right now?
So Hindustan Zinc is something that we have a positive coverage on.
Okay, Genus Power, 300 shares bought at the levels of 313 for a period of 1 week. Can our viewer continue to hold or sell it? Vaishali, short-term view, very short-term view on the charts.
Short-term view, 300 is the support and 320, 325 is the target.
Mazgon Doc, Vaishali bought by a viewer Priyanka at 2489. Looking for a short-term view on this one as well.
So Mazgon Doc currently 2404. I think continue holding 2450, 2480 can be the target.
Okay, the next one is for you again, Vaishali. Swiggy, 110 shares bought at the levels of 380. Harsha from Vijayawada wants to know whether to continue to hold, add or sell from a short-term perspective.
Hold with a stop loss of 245 and can see 280.
So on what you should do now?
This was difficult for me because we had a coverage on the positive side. That's under review. No comments.
Okay, the next one is on Gillette India. Our viewer is holding since the level of 7708. 50 shares is what Murli has been holding. Fundamental view on this one, if any, Gaurang?
It's one of the most promising companies in the FMCG, especially the men category and now even women category, the kind of products they have. Very strong company. Won't give specifics since we don't have coverage.
Next one's from Krishna from Hyderabad. He bought Tanla Platforms at 816 to almost 4 years ago. He's still in losses. Vaishali, on the charts, is there any revival here to sustain? What should he do?
It is showing signs of revival. 450 is the support, and if this stock moves above 600, it gets into a good strong trend going towards 750.
Got it. Well, that is the end of the first round of the rapid fire in this edition of Ask Profit. There's another one in about 20 odd minutes. So viewers, stay tuned. We'll just take a very short break. Come back with a lot more stock related queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. In Profit.
He has been tracking markets for over a decade, spots the trends.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your stock-related queries on the number that's flashing on the top of your screen. You can also call us on the landline number and speak to our guest directly as well. And Lakshmi from Chennai has exactly done that. Lakshmi, very good morning to you. What's your query?
Very good morning to all of you, sir. I wanted to buy Tata Steel.
Okay.
So what is the price to enter and what is the short-term and long-term target for this?
And are you looking at the charts while entering this counter, Lakshmi, or are you looking at the fundamentals?
Charts only, sir.
Okay. Vaishali, let me come to you then on Tata Steel. You've seen a very strong run-up. But what's the momentum on the charts now?
So I would say overall full metal sector has given a good run-up. It's just consolidating. So Tata Steel, I think a good support level would be between 195 to 200 levels. That would.
But what's the momentum on the charts now?
So I would say overall full metal sector has given a good run-up. It's just.
Mr. KV Narayana Rao from Visakhapatnam is holding 100 shares at the levels of 3,200 and wants to know from a 2-year perspective, can he continue to hold, maybe add more at the current market price? Gaurang, your view on this one?
So Mahima, since the time this arm got separated and listed as a separate entity from Siemens into Siemens Energy. So as a disclosure, when the combined entity was there, Siemens, we had a positive coverage. We continue to have a positive coverage on Siemens. On Siemens Energy, we don't have coverage, but this entire sector again looks very, very promising. Whether it is to do with Hitachi or companies like Siemens Energy or companies like Varta Aquabag or companies like Thermax, a very promising business outlook in terms of orders coming in, and execution of orders for these companies is above industry standards because of their capability, capacity, experience, manpower, and technology. So it's a strong company, very competent player and able to take up challenges. Won't give specifics since we don't have coverage.
Okay, all right. So that's the view on Siemens Energy. I think we've got Chetna who's calling us from Gujarat. Chetna, very good morning to you. What's your query about?
Madam, last June I was purchased 171 shares of Kaveri Defence at rupees 124.66. But after that it was rising, then suddenly it came down. I was thinking like it may go high. I was waiting and I was added some more shares also, but it's right now it's 50% of loss. I don't know what to do. Please guide me.
You said Kaveri Defence, is it?
Yes, madam. Kaveri Defence. KAVDEFENCE.
Okay, all right.
Cow Defence, like that it will be.
Okay, it's a very small company, Chetna, and I'm guessing you looked at the charts while buying this one?
Yes, madam. No. Without knowledge, I was purchased. I was new trader.
Yeah. Okay, understood. So, understood your point, Chetna. And are you buying this one?
Yes, madam. No. Without knowledge, I was purchased. I was new trader.
Yeah. Actually, it's a very small cap company. Chetna, first of all, before I go to Vaishali, and I think Vaishali will agree with me, it's a very small cap company, a 300 crore market cap. So if you're starting out very new, Chetna, first of all, before I go to Vaishali, and I think Vaishali will agree with me, it's a very small cap company, a 300 crore market cap. So if you're starting out very new, you shouldn't venture out to such micro cap companies, right? But if you've had the chance to take a look at the charts, Vaishali, any view that you can give, Chetna?
Well, chartically, there's nothing much happening. All I can say is that it's just a consolidation. So if you're lucky, this stock can, just take a support at 60 levels and give a bounce up to maybe 80. Else, I would say please switch to a good, healthy stock.
Got that view, Vaishali, and hopefully that helps you, Chetna, as well. But the next question coming in on from our viewer Venkat Ramani. He wants to know about Prince Pipes and if it's a good time to enter this counter considering Q4 results. But Gaurang, from the piping space, we were expecting inventory gains in Q4, but that could reverse in Q1, right, because of the volatility. So should investors take a look at these results with a pinch of salt? How are you viewing the space? Anything that you like?
Well, so we do have positive coverage on Prince Pipes and Fittings. Other than that, Astral is the other one that we have a positive coverage on, Puneet. And this entire theme that the government has very well elaborated and implemented at ground level, and that is Har Ghar Mein Jal or Har Nal Se Jal. Difficult times, Puneet, when the Met Department or the SkyMet tells us that we're going to have a deficit monsoon of 92 to 94% of long-term averages. But I think there's been a very well elaborated plan in terms of connectivity, in terms of water supply, irrigation, etc., etc. Long term, remain positive. So if you have it, hold it. If you have it at higher level, maybe on dips you can add it, and if you don't have it, very well elaborated plan in terms of connectivity, in terms of water supply, irrigation, etc., etc. Long term, remain positive. So if you have it, hold it. If you have it at higher level, maybe on dips you can add it, and if you don't have it, you can buy it for long.
Okay, all right. So that's the view coming in on Prince Pipes. We've got our next caller. I think Shirdi is calling us from Hyderabad. I hope I'm pronouncing your name correctly. Go ahead, ask your question.
Yeah, my Shirdi. It's cool. Yeah, thank you. So my question is on K-Fintech. I see the stock dropping over like 16%, 17% from where I bought at 974. I see that the profit YOY has declined, but I'm seeing that this will be like a revival story again once the Ascent Fund Services, whatever they've acquired recently, actually synergizes with the business. So that's my take, and I wish to accumulate more at this particular juncture. I want a fundamental view on this.
Okay, fair. Got your question, Shirdi, and I'll take this up with Vaishali. Down to hit a low of almost 806. So corrected quite a bit. Your view on the charts, considering that are you seeing some revival? Do you think that the downturn is now over and there could be some up move which could give some profits to Shirdi?
Yes, Mahima, that's what I think, because the stock has just corrected one way and right now it's in deep oversold and trying to come out of it. So at this juncture, of course, I would not say exit or something. You can expect
profits to Shirdi.
Yes, Mahima, that's what I think, because the stock has just corrected one way and right now it's in deep oversold and trying to come out of it. So at this juncture, of course, I would not say exit or something. You can expect a bounce back. If the going is good, I would say 750 would be the support. And if we see a good bounce, this can go perhaps to 950 to 1050. 1050 is the big hurdle because that is a strong 200-day moving average resistance. So hold on with, now that you've held on for so long, 750 should be the stop loss and wait for this to surge high.
Got that view, Vaishali. But the next question is coming from Akshay. He was holding on to Tata Motors before the demerger, so he has both those shares now. And wants to know what he should do with this counter. And if he should hold on or exit. Gaurang, I think Q4 for the PV business, India was, I think, one of the best that we've seen ever. But the JLR business continues to hamper the profitability. His price post, that has also come down a little bit. But what's your view on the stock? Anything that you like between the two, if there is a preference?
Well, so we had a coverage as a single entity, Puneet, before it got hived out into two different businesses. Tata Motor was consistently in our coverage at that point of time. And post that, currently we have a positive coverage on Tata Motor CV. And CV business is doing quite well compared to the PV business. And like you rightly mentioned, JLR has been a little bit of weight heavy for the Tata Motor PV balance sheet. There is a little bit of uncertainty in terms of when the business is going to pick up. And in these kind of times, Puneet, it even becomes more challenging.
Got Krishna waiting by. Krishna, a very good morning to you. What's your query about?
Good morning. Actually, I wanted to know about the HDFC. What would be the current stage and how long I can hold it? For short duration or preferably long?
Okay, so you've not bought it yet, I believe.
I have few.
Okay.
I just want to add up some more.
So when you bought them, was it the charts that you saw or did you see the fundamentals of the company?
It was based on fundamentals, but it was quite long. It's consistently falling now.
Fair. Okay. I got your question, Krishna. I'll take this up with Gaurang then. Gaurang, we already took your view in the rapid fire round, but
It was based on fundamentals, but it was quite long. It's consistently falling now.
fair. Okay. I got your question, Krishna. I'll take this up with Gaurang then. Gaurang, we already took your view in the rapid fire round, but if you can give an elaborated view on HDFC Bank to Krishna.
Well, so again, Krishna, if you're a long-term investor, I don't know, you not mentioned at what price you got in at. But in case you got in at 800, 850 or 900 levels, or maybe at higher levels, my view is, first of all, our recommendation from our fundamental team is to hold on to it. Your question was whether to add more. Now, given the fact that I'm not aware about what level you got in at earlier, if the stock is available maybe 5-10% or maybe more compared to what you got earlier, maybe if you bought in at 900, 950 and currently the stock is trading from a long-term point of view, maybe 50% you can average, and if you have a little bit more risk appetite, you can average a little bit more. But continue to hold, and average should be the strategy.
That view, Gaurang, and let's go across, take another query now. This one's on EPAC Durable. The company comes out with results today as well, so keep a note of that, viewers. But Viro Pakashay is actually holding shares at 180 and he's holding 1,000 shares. So he is currently in profits, but of course it's come down considerably from that 400 level that he used to trade at. But Gaurang, you mentioned about the cooling product space. You have coverage on Voltas, Blue Star, Symphony, etc. But EPAC also in that space, but has been one of the bearing the brunt essentially of that lower consumer durable AC demand. What are you watching out for in this quarter for some of these companies? Blue Star has of course come out with results, so has Voltas. So your takeaway, if people should continue to hold, given that quarter one is generally a summer season, but what would you recommend?
So honestly, Puneet, I think a delayed summer and then price hike did dampen the demand outlook for consumer durable companies, specifically those who are into ACs. So honestly, Puneet, I think a delayed summer and then price hike did dampen the demand outlook for consumer durable companies, specifically those who are into ACs. My view, our personal view, Puneet, is that the demand from semi-urban and rural India is going to go up to a great extent. And that's what some of the managements have elaborated and given a detailed verbatim as to demand not only coming from metros, tier 2, tier 3 cities, but more so from the semi-urban and rural India. And the fact is also that every year you have seen temperature rise. I think it was not a time in Mumbai especially to see temperatures of maybe about 42 degrees and 45 degrees. It feels like, that kind of a temperature. And up north, the temperature is always rising. So from long term, the demand is going to come back. And that is going to help all these companies.
Okay, all right. So that's the view coming in on a lot of these consumer durable as well as EMS names. But the next one is from Setunath, from their financial going forward. And that's something that the CEO highlighted in the con call. So he's studied the con call as well, but he wants, Gaurang, your view on this one, if any.
Well, so gold loan, this is the tricky one, Mahima. It is not going to be only negative for South Indian Bank, but all the banks and especially the gold loan companies, given the volatility in the gold and silver prices. So from a long-term point of view on South Indian Bank, we have an accumulate stance. And I don't think short-term negativity in terms of one-off quarter should be a reason for changing your goals and objective as far as long-term investment is concerned, Mahima. Bank, we have an accumulate stance. And I don't think short-term negativity in terms of one-off quarter should be a reason for changing your goals and objective as far as long-term investment is concerned.
Holding 550 shares at an average price of 165. Wants to know if it's a good idea to add more, continue to hold or sell. What's the technical outlook on this one is what Shankar is asking. Vaishali, your view on the charts for Sammaan Capital.
So actually it is in a downward trend, but today's candle shows some revival. So I would say keep today's low as stop loss and continue holding. 145 is acting.
Is asking. Vaishali, your view on the charts for Sammaan Capital.
So actually it is in a downward trend, but today's candle shows some revival. So I would say keep today's low as stop loss and continue holding. 145 is acting as a crucial resistance. If it moves past, then you will look for your targets of 165 and so on. So today's low, it should be the stop loss.
Got that view. The next question coming in now, this one, on Avalon Tech, we actually had a brokerage note from Nomura also, which initiated coverage on this stock. And, our viewer, Bindu, wants to know if it's a good time to buy right now. Gaurang, in the EMS space, how are you weighing the counter? Because you've seen the top 2-3 names, Dixon, Keynes, Amber Enterprises, not enthuse the street. You saw a big brunt of that on Keynes as well. While the smaller names are starting to see more conviction, if I can use that word, in terms of sustained 30% growth. Which camp are you in? Anything that you like?
Well, in the equity market, Punit, it is always better to be on the positive camp, right? Negativity doesn't help over a longer period of time. Having said that, Punit, the negativity or these stocks have not enthused the market only in the short to medium term. I think over the last maybe about 5 days or 10 days. Beyond that, if you actually go to see, names like Amber or Dixon or Avalon, or maybe names like under which we have coverage. So we have coverage on Amber Enterprises, we have coverage on PG Electroplast, we have coverage on, or maybe names like under which we have coverage. So we have coverage on Amber Enterprises, we have coverage on PG Electroplast, we have coverage on CG Power. All these names have done well. So maybe, and some of them may have run up before the numbers and post the numbers they have corrected. So long term, again, keeping in mind the government PLI scheme, focus on Atmanirbhar Bharat, reducing dependency on imports of whether it is chips, semiconductors, PCBs, etc. I think we have a long way. And companies are adding more capacities, Puneet. Now, that's a very good positive takeaway as far as the long-term growth trajectory is concerned. So we remain positive on this sector, EMS. We are positive on, as I mentioned, Amber Enterprises, CG Power and PG Electroplast.
The next one that we have is on Aether. Our viewer Chandrasekhar from Bengaluru wants to know if you can go ahead and buy at the current levels from a slightly long-term perspective. Vaishali, your view on the charts?
Yes, it has a very strong uptrend. I was 830 levels still add more because I think this stock is going to go to much higher levels in times to come.
Talking about Aether Energy or Aether Industries, because both counters are near that 800 to 900 mark. Just wanted to get a clarity.
I spoke about Aether Energy. If you want me to give you
in industries also, if you can give a view.
Yeah, so I think this too is looking good. Can be added at this level, 1050, and look for a near-term target of 1300.
The other one, it's on, on JK Tires. Actually, if it's the right time to enter is what Kiran is asking. On the charts, Vaishali, anything that you're picking up?
Yeah, so this was beaten down, I guess, because of high crude.
Is what Kiran is asking. On the charts, Vaishali, anything that you're picking up?
Yeah, so this was beaten down, I guess, because of high crude and maybe extra this. But I think deep oversold, long-term trend is still good. Start buying from here on. You can see good returns from here.
Okay, all right. The next one that we have is on Garware High-Tech. Sumana from Dubai is holding 50 shares, bought at the levels of 4,600. Says it started to move up a few days ago. What's the upside target for this one? Vaishali, your view on the charts?
Sorry, Garware High-Tech.
Yes, Garware High-Tech. Currently trading at 55.69. It's spelled as Garvare.
Yes, I got it. I got it. It's already in an uptrend. So what is the question? You want to hold or book profit or what is it?
Target is what he's asking.
Okay, so I think this can go towards 6,000. The trend is good. It has gone above all the highs. So I think this can go for the near-term target of 6,000. So continue holding with the trading stop loss of 5,400.
Got that view. The next question, that's coming in. So he's currently sitting on profits and he's holding 260 shares as well. Asking if this is the level, if he can add a little bit more at this point of time. It's been good results, Gaurang. Would you recommend adding more now? It's slightly at the pricier junction, right? At 35 to 36 times.
Look, anything good in the market is going to come at a premium and anything bad is going to come at a discount, right, Puneet? So happens to be a very strong player in the entire defense pack, BEL. We've been having a positive coverage. Our targets, if I recollect right and my memory serves me right, is somewhere close to about 505. Very strong order book. Other than having the strong order book, Puneet, the company's got, again, manpower, technology, and machinery to execute that order book. My only request to all your viewers, if you eventually understand defense sector and you decide to invest in defense, have 3 to 5 year kind of time horizon, because these companies make very complex engineering, high technology products. You can't deliver a missile, whether it is surface to surface, air to air, or air to surface within 24 hours. It takes a lot of time. So have 3 to 5 years plus kind of time horizon.
Advice, Gaurang, and a valuable one. So thank you so much for that. Time for a rapid fire round. Vaishali and Gaurang, try to keep your answers as short as possible. The first one is the data patterns. This is for you, Vaishali. Uma from Bengaluru wants to know as to what price should she average. She's bought at the levels of 3958.
Okay, so average at 3600.
The next one's, Crompton Greaves.
So, Crompton Greaves, I believe you're talking about Crompton Greaves Consumer Electricals.
Yes, that one, yes.
Puneet,
Yes,
that
is 700 shares bought at 280. Gaurang, any view?
So, Crompton Greaves, I believe you're talking about Crompton Greaves Consumer Electricals.
Yes, that one, yes.
Puneet, if that is the stock, we have a positive coverage.
Okay, Mazagon Doc 30 shares bought at an average price of 2712. Continue to hold from a long-term perspective. Surendra from Bengaluru wants to know. I think Gaurang already answered that, but Gaurang, quick view.
Well, again, if long-term continue to hold on, and if you want to add to it, you can definitely do that. We have positive coverage.
Motia Loswal bought at 913 by a viewer. He wants to know if he should still continue to hold. This is Jaideep. What would you recommend, Vaishali?
Hold.
Okay, the next one that we have is on Jio Financial Services. Our viewer Mahalakshmi from Hyderabad wants to know if she can continue to hold this for 2 years. She's got 1,000 shares at the levels of 253. Gaurang?
Hold on and add for long term.
L&T bought at 4,000 odd by Subhojit. What should he do, Gaurang, with this counter now?
One of the most promising and profit-oriented companies in the entire cap goods engineering, diversified as we know it. Hold on and add on dips for long term.
Okay, the next one is on KC International. Satyan has bought at the levels of 680. He says he's sitting on a 30% loss since the earnings. But can he continue to hold? What are the short-term targets suggesting? Vaishali?
I would say add more this level.
The next question coming in is on Tenneco Clean Air at 506. So she's currently sitting in profits. Asking what she should do with this counter. Gaurang, any coverage by any chance if you covered it during the IPO or anything that you like in the auto ang space?
So auto ancillary, like I mentioned, Uno, Minda, Madhusan, Samardan, CIE Automotive are some of the names that we are positive. But this one, I think it'll better Vaishali take it.
Vaishali, any view by any chance?
Are some of the names that we are positive. But this one, I think it'll better Vaishali take it.
Vaishali, any view by any chance? On Tenneco, I know recent listing, limited charts.
Yeah, so if the trend is intact, I think continue holding with a stop loss of 560 and this can go towards 630.
Okay, NHPC is the next one. Prashant has bought 2,000 shares at the levels of 83 rupees. Continue to hold, Vaishali?
Hold.
The next one coming in now, it's on Avantel, bought at 158 by Dilip. What should he do with this counter, Vaishali, now?
So Avantel currently at around 153. Continue holding and I think look for a target of 180.
Okay. Okay, the next one is on Force Motors. What targets, Vaishali, do you see on the charts for Force Motors for the next 12 months?
Can be 25,000 levels again.
Realtel bought at 330 and Ramana currently sitting in losses, asking if she should still continue to hold. Would you recommend that, Vaishali?
So I think Realtel continue holding with a stop loss of 305.
Okay, Biocon, 3,000 shares bought in 2004. Neerja wants to know as to what should be her strategy going forward. Gaurang, your view?
So this one has been one of the most underperformers in terms of pharma pack. But yeah, if you're a long-term investor, continue to hold.
Next one's on KRN Heat Exchangers. Our viewer Sudhir from Jammu wants to enter this counter now. Vaishali, would you recommend that?
Good level to enter is 850.
NTPC Green, is this a good time to invest? Shankar from Bengaluru says he's planning to buy 500 shares. Vaishali?
Yes. most of the green stocks are doing well and getting in momentum. This too looks good. 100 should be the stop loss.
Okay, all right. So that brings us to the end of this rapid fire round as well as Ask Profit by Vaishali and Gaurang. Thank you so much for helping us answer all those stock related queries. But viewers, we are completely out of time. But if we've missed your query in this edition, then you can tune in at 2 p.m. and ask all your stock related questions. But do stay tuned because Know Your Company comes up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, when the headlines move fast, perspective matters. On Editor's Cut, to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. World, technology. Noise filtered, numbers decoded.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Interesting show of KYC where I get you hidden gems, interesting market cap, companies, and also interesting company has come. But before that, I'd like to give you some hints. It's a bit difficult to guess. It's in a very complicated sector, but I'll try to simplify it for you. They manufacture polyester films and specialty polymers. Interesting company. Also, recently the company has come out with its Q4 numbers, and if you look at sequential basis, the company has delivered. That is where my interest came, and of course promoters also were increasing the stake in this company. Stock itself is up 37% from March lows. It's a bit difficult company to guess, but try to do that. In the packaging segment, we have 5-6 companies. One of them is Ester Industries. This is what we are going to talk about. And why are we calling this company? That's the big question here. It's largely a small cap company. Why the interest? The question is on the Q4 numbers. There was a little bit of turnaround, and will that sustain going ahead or not? And remember, there's a lot of crude derivatives at play when you deal with a packaging company. So let's just look at the key questions. Why are we calling this company? The first one is definitely going to be there on the improvement in the trade environment. Is the momentum going to continue, especially on the trade tariff front? That is where the clarity has come in as of now for this industry. They have a higher exports also, and the rising raw material cost, is that a concern? Is there a pass through there? All these questions we'll try to understand, especially learning the industry. And will there be any margin pressure in the first half of FY27, or the global pricing will offset that? That's the important question to be asked, and of course this becomes also important. Apart from this, there are some questions also which we'd like to focus on, and that is the implementation of plastic waste management rules. That's a major retrigger, especially in the recycling theme, and recently they did a 165 crore fundraise rules. That's a major retrigger, especially in the recycling theme, and recently they did a 165 crore fundraise via warrants. Where will the application be? That's the key question to be asked. And the European Union's eco-design for sustainable product regulations, the next 2 to 3 years, there is more time left. What benefits does this happen? And this is very interesting, and this is what we will talk about. Ester and Loop JV. This is where the specialty angle comes in, and the company is moving towards that. So maybe this is an inflection point to an otherwise a commoditized business, and of course the capex expansion plans ahead as well. Will they take it? Will they kind of delay it on the geopolitical issues? That's what we'll try to figure out. But we have a turnaround specialist in this industry, so their conversation will be really strong. We have Vaibhav Jha, CEO at Ester Industries, where he'll talk about how the company might move ahead, especially whether it's at an inflection point or not. But let's try to understand Ester Industries करती क्या है. छोटी कंपनी है, प्रमोटर अपने स्टेक ने acquire किया है थोड़ा, और that is where the interest has come in. 40 years old company. It manufactures polyester films, specialty polymers, and rPET as well. These are the recycled PET, to put that in perspective. But where are the applications? So this is of course there in the primary flexible packaging space, and we are seeing this long-term trend going ahead. Specialty polymers, they are in the niche area. This is into the rigid packaging, textiles, especially in the technical textiles. That is where a little bit margins also come. Customers are in over 50 countries, and a good exposure they already have. Apart from this, let's look at the other key details, and this includes 3 state-of-art manufacturing facilities across India. Some is there in Haryana, some is in Hyderabad. 20 granted patents they have, and manufacturing facilities across India. Some is there in Haryana, some is in Hyderabad. 20 granted patents they have, and a very important strategic partnership they have with Loop Industries JV, especially with Nike as an anchor customer. That's what we will be looking out. And 62% revenue comes from exports. That means the depreciation of rupee is actually aiding the company. They have a key customers. They include Godrej, ITC as well. And also, if you look at the FY26 revenue breakup, still the 87%, the majority of that still comes from polyester films. This is the revenue segment. That's around 13% coming from specialty polymers. This is where the value-added segment also lies. So it will be pretty much interesting how this product mix changes going ahead. And this is the installed capacity. You can see polyester chip, polyester film, and rPET. This comes under your polyester polymers. And there's a second segment which we spoke about. This is specialty polymer. These are the installed capacities. But what's the key management commentary in this Q4 earnings? They are focusing on the premium specialty product mix. So that'll be interesting to talk about. rPET, there's a higher production and demand happening, and this is for the sustainable packaging, and this is the future I would like to talk about, especially if you're tracking this sector. Uncertainty is there in particular segment in specialty polymers. So uncertainty is there in particular segment in specialty polymers. So we'll try to understand that from the management, and that was the impact in the Q4 numbers. But there are key concerns. higher raw material costs and that input, is it going to impact more in the first quarter? Second concern for this stock is there's a lack of FI and DI participation, and that brings it to my next point, that's the lack of analyst coverage, and this is why we get these companies in KYC to you to make better and informed decision. Return ratios are also muted, and that is where the concern lies. KYC to you to make better and informed decision. Industries. But is the worst over? That's my question. Another take I'll want to give, because the recycling business in India might drive alpha, and of course from foreign customers as well. Now they have an improved global pricing right now because there has been an increase in the Chinese origin prices. That's what the management has also stated. And interestingly, a lot of anti-dumping duties coming on the BOPET. This is one of the key products of theirs in their film imports, and this augurs well for domestic players like the company. BOPET Films export headwinds are abating on the tariff clarity. That's what they mentioned. That's what we have seen in the Q4 numbers also. This is very important to note down that maybe the worst is over for the company and promoter buying continues in this counter. That is where the interest for me. KYC, what are the ratings we generally give to a company when we judge them? First and foremost, of course, the income statement, balance sheet, and cash flow is something which we definitely look at, and these are the most important ones. Then is the return ratios, especially I'll try to get you the ROC numbers to see over the period of 4 to 5 years how the company has performed. Then is the return ratios, especially I'll try to get you the ROC numbers to see over the period of 4 to 5 years how the company has performed. Shareholding, how much has been moved. Of course, FIDI is something number which I'd like to show and point out to you for this company. Street cred for the last 5 years, has the company actually made money or not? Valuations, it's a very competitive market, especially in the packaging segment. Is there a commodity at play, or is there a valuation comfort, or isn't? That's the key question to be asked. And lastly, the outlook, the medium term, long term and short term. I'll get you all of them in our rating parameters. But before that, let's start with the first rating parameter, and that is the income statement. And this is where a little bit of concern lies. On a long-term basis, there hasn't been much. The 3-year CAGR numbers, EBITDA has been strong, but top-line growth hasn't been that strong. So overall, not a very strong set of numbers coming in. But if you look at the Q4 numbers, I really like the net profit in the company from a loss turned into net profit. That is where the turnaround has happened, and this is what is something which augurs well for the company, and that is what I feel is negating their long-term performance. But the margins, at once it was at 17.9% in FY22, and then you see how much volatile the margin setup is, and this is the entire nature of the industry. Do not blame the company, at times the industry as such, and that is why at times what happens is a derating happens in the industry as well. So that must have impacted the company as well, and that's what we can see on the screen. So it's a neutral rating right now on income statement right now, especially focusing on the Q4 numbers. That's where the turnaround might sustain. Balance sheet is pretty strong, I would say, and their borrowing levels have come down around 438 crores. There it is stable at 404 crore rupees. Remember, there is a working capital is also required in this business, and it's decently, cash flows are there in this company around 104 crore rupees in the cash balances, and they recently did a fundraise also. So yes, net, the balance sheet management of the company remains strong. So I'm going to give this a thumbs up. But let's talk about from income statement and balance sheet, let's talk about cash flows, what's happening here. And remember, there's a little bit of lumpiness also at times in the way geopolitical tensions work. Remember, 62% of revenue comes from exports as well. So there is lumpiness, as we discuss, but look at the cash flow from operation. That has done well. And of course, the cash flow conversion has also been strong. But will it be, sustaining all throughout, or will there be some volatility? To give that perspective, I'm going to give this a neutral rating because this industry is as such. So that's the neutral rating for the cash flow segment. Return ratios, and that's where my concern starts coming in. ROC numbers, generally you should expect something between 14 to 15%, but the way volatility comes in, and see in FY22 this amount was 14%, now that has come down. You should expect something between 14 to 15%, but the way volatility comes in, and see in FY22 this amount was 14%, now that has come down. It's very lower side. That is why a little bit of concern comes in the return ratios, especially when I'm tracking the ROC numbers. That means a lot of stock returns have also not been made in long term. I'll get to that, but as of now it's a strong thumbs down when it comes to the return ratio. Let's talk about the shareholding. And shareholding, the promoter stake, it's unchanged, literally 62 odd percent. A minor buying happened in the March quarter, and after that also little bit of reports suggest that promoter buying was there in this counter. Public, it's been around 38 there, but look at the FIs and DIs. There hasn't been any kind of bigger move coming in, very negligible exposure. That's where my complaint is. Why is that? Is there lack of analyst coverage, or does the company needs to come out with something more? So as of now, let's keep it neutral rating for the shareholding segment. Apart from the shareholding segment, let's talk about street cred, and this is very much important. As the company actually made money for the investors, of course, a lot of packaging players there. There's a lot of stories over the last 3 to 4 years that this industry will do well, but there seems to be a derating, and this is where the concern lies. From March lows, a lot of stocks went up. The stock company also went up 37%. But to give you another picture, look at this. From 2025 highs, the stock is still down 34%. एक साल में देखें तो 19% का घाटा. But the biggest hit, if you are a long-term investor, is for the last 5 years, the stock is down 32%. So big concern. It hasn't made money for medium-term and long-term investors. So I'm going to give this a thumbs down as well. Let's talk about valuations. Despite correction, are the valuations attractive? In my analysis, no. Why? Look at that. These are the trailing 12-month P as per Bloomberg's data. I've taken Ester Industries still at 64 times. But you compare that with the other players, especially Uflex and Cosmoforce, they are ranging between 15 to 17x. And the story is the same. If you get even Polyplex, that's coming in at 13 times. Compare that with Jindal Poly, yes, that's on the higher side, it's 49x. But amongst its peers also, Ester Industries is expensive. So we need to see the earnings. Good earnings comes in, then this ratio falls down. So this is the entire picture. But as of now, in peer comparison also, I'm going to give this a strong thumbs down. Let's talk about outlook. That is where my interest lies. The company is optimizing, or they are showing optimism, from medium to long-term perspective. So that's a very long kind of a statement coming in. Let's get into a little bit more details. What else the company is focusing on? They recently did 165 crore capital infusion. How will they go ahead with it? That's something to ask about. And also the anti-dumping duties coming in from the government is against China and other countries is a positive trigger as well. There was a good turnaround in the fourth quarter, and the Chinese pricing is on the higher side, and that is where the bullishness happened. But take everything with a pinch of salt. Why? Because there's a rising interest rate scenario. Of course, pass-throughs and price hikes do take time in this industry also. So I'm going to give this a neutral rating. So let's try to figure out what's the total KYC rating for Ester Industries. Largely untracked, but an interesting name came. In my analysis, income statement, cash flow has been neutral. Balance sheet is nicely managed. But the concern starts coming in when I talk about the return ratios, the shareholding, the street cred. That is where the concern lies. Outlook is largely neutral, and of course there is a concern that there is no FI or DI participation. So the company needs to come up with something in the numbers also, and of course a good momentum in the stock will also aid investor sentiment. But as of now, there is a lack of analyst coverage. Let's see the total numbers. It's on the lower side of the averages generally, which I give for a company aid investor sentiment. But as of now, there is a lack of analyst coverage. Let's see the total numbers. It's on the lower side of the averages generally, which I give for a company in KYC, and Ester Industry gets 3 out of 8. But that doesn't mean that this is going to be forever there. Of course, if company starts improving, there will be chances this number goes up as and when we get them again in KYC. So to put that in perspective, we have Vaibhav Jha. He's the CEO of Ester Industries. He'll be talking about, the growth outlook for the company, and interesting trivia about him. He's the ex-CEO of Reliance Sibur Elastomers. He had led this company in a turnaround. So he's a turnaround specialist, and 2 decades of experience he has in chemical and synthetic rubber, and also education from IIT Bombay. So we'll try to get him all details with, Vaibhav, but just
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk and volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. And India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on.
Welcome back to KYC, and now we are joined in by Vaibhav Jha. He's the CEO at Ester Industries. Good afternoon, Vaibhav. It's always a pleasure to have you, and of course a very strong set of sequential number growth which I have seen coming in the company, and of course the management commentary was also strong. I just wanted to understand, with so much uncertainty involved, you have a higher exposure to exports. Do you think this turnaround, or whatever these numbers had come in the fourth quarter, do you think this momentum spills to Q1, or is there some caution also at play?
Thank you, Sharad. Always a pleasure to speak to you. Sharad, see, I think there are two factors at play, right? When you try and assess what we are trying to do here at Ester. One is the industry structure, and the industry structure has undergone a change, both domestically and internationally. So whatever were the headwinds which we faced in the previous quarters, they have transitioned into tailwinds. On the on the industry side in India, there has been a big structural push which we have got in terms of improvement in BOPET demand due to the recently notified PWMR rules, which mandate incorporation of a certain amount of PCR content in the rigid as well as flexible packaging. So what this means is that the brands in the rigid as well as flexible packaging. So what this means is that the brands who actually are the end users of the flexible packaging, they are going to move a lot of their laminates from substrates like PPP, other substrates to BOPET, because BOPET is the only substrate which can help them fulfill these recycling norms which have been notified under PWMR. Also on the rigid side, where 30% of recycled content needs to be incorporated, it's going to create even better demand for rPET compared to what we had seen over the last few quarters. So there is a demand pull. On the capacity side, we are seeing reasonable stability with very few capacities which are likely to come up in next 3 years. So all in all, what this means is domestically the operating rates are going to be high. There is going to be a leverage in terms of the profitability that the industry can command. On top of that, DGTR has recently introduced or notified, and we are expecting that very soon Ministry of Finance is going to notify it. And this anti-dumping duty, whenever it is applied, will be on the low-cost imports which the industry was struggling with from countries like China, Thailand. Yeah. So overall, to summarize, structurally, we are seeing great strength in industry. And therefore, we think they should sustain.
Vaibhav, the strength we can understand is a very important statement you've given, that from headwinds, the sector turns into tailwinds. But just to understand a little bit more, the raw material pricing is getting costlier also. I just wanted to understand, will that kind of impact the margins in first quarter or the second quarter? Because there is an impact definitely there. And if yes, any price hikes in the annual, because there must be a time period also where there's a lag and then you give out your price hikes as well. So just wanted to understand both the margin outlook and the price hikes.
So see, margins in this industry are depends on the competition from imports as well as the domestic operating rate. The industry has the ability to pass through the raw material increase, so to say, right? So I don't see a challenge in terms of sustaining the margins or improving the margins because of the tightening supply-demand balance in the markets.
So that's an interesting take on that. But the high margin segment, Vaibhav, we are talking about it also, management commentary coming in the high margin specialty product segment. And also let's put that in perspective in the value added segment. So over the next 2 to 3 years, how much of your key products, changes into the value added segment or the specialty premium as you call it?
Right. So let me give you a little bit of background. So we have now at a 25% share, in terms of specialty films as a part of the overall basket of BOPET films that we sell. And volume-wise, we have seen a growth of almost 15%, despite losing some market in US due to the tariff issue, which we are going to regain now. The other specialty set of product that we have is what we call specialty polymers. And so these are the two segments. And going forward, our target is that we want to take specialty film share from 25% to 60% plus in next 2 to 3 years. And specialty polymers, we want to grow at a sustained CAGR of 20 to 25% over next 2 to 3 years. So those are our targets backed by the business development pipeline, which we have built over past year and a half and which we continue to build. So those are the targets that we are looking to achieve.
Okay, these are two important targets coming in. So of course the margin profile changes of the company and targets coming in. So of course the margin profile changes of the company and a little bit of turnaround in the perception of the industry and the company also comes in. But I just wanted to understand, there was a recent 165 crore fundraise as well via share warrants. What's the application like? Because I presume you are not going very heavy on the capex right now. I just wanted to understand where this usage will be coming in.
So you're very right, Sharad. So within the Ester industry, we are going for very targeted, specific capexes, small capexes, which would enhance our ability to deliver and expand on our specialty portfolio. This 165 crores is something that we have raised for our next growth investment, which is the Elite joint venture, which is a 50-50 joint venture between Ester Industries and Loop Technologies. The total investment is going to be in the range of $160 to $180 million. going to come on stream in 2028. This is first of its kind cutting edge technology which we are putting up for chemical recycling technology, which will make textile to textile recycling a reality, and which is very difficult to achieve anywhere in the world. We have signed Nike as our anchor customer for this joint venture 2 years before the commencement. So this gives you an idea of how much in demand the products to be manufactured by this JV is. So we raised this 165 crores to fund the equity part of this JV.
That's pretty much interesting. And then, of course, so two new triggers comes in. One is, of course, this JV where we'll see the benefits from FY28-29, and also the way you're moving towards the value-added segment. And of course, Vaibhav, history speaks for itself. You have a good exposure and experience in the turnaround segment. But I want to understand a little bit about the global front also. The European Union has some important standards also, apart from PWDR, which we spoke about it, eco-design for sustainable product regulation. What does this mean? Where does the company stand? And what kind of moves we can expect? You already mentioned market share gains in US market is coming in a category. But over here, what is it for the European Union?
So European Union, I think they are a leader in sustainability regulations, and they break the charts when it comes to the sustainable businesses. And this particular regulation is something which is going to benefit the JV elite that we just talked about. Now, what this regulation does is it makes it mandatory for any apparel sold in EU to have a certain percentage of textile to textile recycled content. And this essentially means that any textile that you are selling in EU recycled content. And this essentially means that any textile that you are selling in EU needs to have this recycled material sourced from a textile. And there is hardly any technology out there in the market which can make it a reality other than the elite JV. So this is a big, big plus for the demand of the products which we are going to manufacture out of JV, and it's going to be quite positive for us.
Right, Vaibhav, we are running out of time, but you have given us almost a 360-degree picture and clarified a lot of queries which are raised in by viewers at KYC, and that's why KYC is one of the #1 shows. It's always a pleasure to have you, Vaibhav, and best of luck for the future. So
Thanks,
that's
always
the management
a pleasure.
of
Bye-bye.
Ester Industries, and there are some signs of turnaround. Maybe the companies at but that's something which the time will only tell. For such interesting stories like this, stay tuned to NDTV Profit and keep watching KYC. Something which the time will only tell. For such interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision. Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate
matters and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex.
Cap IT is showing strength for the third straight day. So that's
Melody itni chocolatey kyun hai? Exactly, it was the jingle that everyone remembers as well, and that's just an interesting tweet that we are picking up from Prime Minister Narendra Modi as well so far. A surprise gift for Giorgia Meloni that he has taken along with him to Italy. But let's get back to where markets go. In terms of what's on our watch list, Hindalco, likely...
It was called Sequent Scientific.